This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, looking ahead into the weekend of May, looking ahead into the CPI report next week. Forget about it. Very equity-centric today. Without question, the inside of the week from equity strategist Paul Sweeney. Tom, 40,000.
Sure.
It's here. I'm sorry, it's been the quiet story this week, Paul.
I like the round numbers, Tom. 40,000 at that. We're down at 39,640. Looking up about 1% on the futures here this morning. But this market's creeping higher, Tom.
It is 52.56 on SPX, up a solid 17 points. You know, you get 5,300, 54. Ed Yardeni, remember, he came out with 5,400, 5,600. People thought he was nuts. Again, in May, buy in May and go away. That's what you're doing this weekend, right?
Absolutely. I'm just going to head down to the shore and just kind of kick back. But, I mean, I tell you what, earnings have been the story here for the last couple of weeks, Tom. And, you know, we kind of have a sense where the Fed's going to be here. And now people are focusing on the numbers. And numbers have come in pretty solid. You listen to the Gina Martin Adams of the world, and they're seeing, you know, high single digit, close to 10% earnings growth this quarter. Not too shabby.
And critically, the people that were cautious on earnings are capitulating. They're saying, you know what, it's a little better than we thought. And you got Atlanta GDP with a 4% GDP statistic. Wow. Great set of guests coming up here. Jim Bianco leads off the 8 o'clock hour. James Glassman, JP Morgan, now retired. We are thrilled that out at LAX he will speak to us, Jim Glassman, coming up in the 9 o'clock hour. And this hour, Derek Halpenny on yen and a resilient, strong dollar. We're on Apple CarPlay, Android Play as well. And, you know, there's a lot going on with our Bloomberg Business Flash from the Interactive Broker Studios. Here's John Tucker.
All right, the number to watch for the Dow, 39,807. But that's the Dow. S&P 500 E-mini futures right now, 17 points higher. And that's about 40 points away from a record close there on the S&P 500. NASDAQ futures right now, 75 points higher. That's up 0.4%. Now, later this morning, we're going to get the next piece of data, University of Michigan Sentiment Survey. That's out at 10 Eastern. Embedded in that, the inflation expectation numbers as well. 459 companies in the S&P 500 reporting earnings so far this season. Of those, 79% delivered positive earnings surprises. You heard Jess mention it, Taiwan Semiconductor Manufacturing seeing April sales jump 60%. And in the pre-market, most active, shares of Novavax 147 points higher. Sanofi inking a $1.2 billion vaccine licensing agreement with Novavax. Novavax shares, again, extending their surge to as much as 217% right now on that Sanofi deal. That is the update on that stock trading right now in the pre-market. 2-year yield unchanged. We're at 481. The 10-year, that is at 445, also unchanged. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. I think she's back next week sometime.
Yeah, I was confused.
So don't worry.
Yeah, it's okay.
all over the place.
I think you're killing it. I mean, you know, great.
Oh, thank you.
You're in 1 hour, you're here in Moscow, and the next hour, you're Lisa.
I forget who I am.
It's great. John Tucker, thank you so much. We may be able to squeeze in a congestion report here later this morning from our surveillance congestion correspondent as well. First, shout out to all of you. Some people have sent me in notes. I don't have the plague. It's on the edge of it. I'm getting better. Thank you, Wald Cornell. We're getting better every day, and but thank you for the notes. We're really equity-centric today. We want to look ahead into the weekend, into May, and really set up for you the tensions as you try to stay confident with your investments. Joining us now, Brian and Nick. He's with Francois Trahan Macro Research. Just a superb effort here. He survived the Dartmouth bubble, so he can't be that good. So I look, Brian, at where we are in the tension point here. It's a delicious opinion that we saw yesterday on the show between people saying inflation is going to evaporate because real estate inflation is going to evaporate. We're going to get back on a disinflationary trend. And there's a substantial group that says, no, we're not. On an economic basis for our investments, do we model disinflation or resilient inflation?
disinflation. So we think this is going to be beneficial for stocks in the near term, right? People like to see softer inflation numbers, whether it comes from real estate, which it's a question of needing to see more rent disinflation, but we need to see that start to show up in CPI. We've seen it in Zillow, that we've seen it in an apartment list for April. Rents are still climbing softer or less than normal for this time of year, and year over year, they're back to where they were.
Is the market getting out front now, anticipating that? It's got that feel to me, like the market is an expectation machine, is expecting Paul Sweeney's going to house shop this weekend.
So we're going to see CPI next week probably come in year-over-year basis softer on the headline and the core than the previous month. Real estate is going to be part of that story. You still have car insurance being incredibly sticky. You still have used car prices. That should be coming down as well. So some of those components that people are waiting on to see softer CPI, we think those are going to come through next week. I think the other thing that people are seeing is softer labor market data is leading to resilience or maybe even an embrace by the stock market, where you had the softer payroll number last week, then we had the softer than expected initial claims number yesterday. Stocks don't have a problem with that, right, as long as it's not too soft. So we may be in this pocket here where people are still paying a lot of attention to inflation. The underlying dynamic in the labor market might be softening, but just not fast enough to concern people. And that's why we think this summer, we just published a report on consumer discretionary, might be a window for some of these unloved sectors that are tied to the consumer benefiting from lower rates, benefiting from lower inflation, starting to outperform.
What have you seen so far? We've pretty much played out this earnings cycle here through the S&P 500. What have you seen this earnings cycle? Good, bad, or indifferent? Yeah,
so we're paying attention to the guidance because we're medium term to long term more bearish than consensus, I think it's fair to say. And the companies that are releasing weaker than expected guidance or guiding down in the next couple of quarters are being punished for that. We're not seeing as many rewards in terms of the stock price response to better than expected earnings or sales if the future isn't being guided up as well. And so we retain our caution about the second quarter, third quarter, and beyond.
So you think we're at kind of the end of a business cycle here?
We do.
So do I just go jump into the 2-year Treasury at 4.82%?
You could do that if you want to get your most bang for your buck. We think rates are going to come down across the board. It probably will be a bull steepening in the curve, so you don't get as much bang for your buck in the 10-year, but you obviously get the duration power there.
And this goes back to Francois's work, decades ago. With your caution, where's nominal GDP? Are you cautious with a 4% plus nominal GDP forward?
Not if it's going to stay there, but if nominal GDP is decelerating rapidly.
Are you modeling a sub 4% nominal GDP?
Yes. So we have inflation. Inflation's going to go ultimately where the labor market goes and where growth goes. We're not going to have a 3% inflation or 4% inflation environment with unemployment at 4.5%, 5%, 5.5%, which is where we ultimately think it's going to go coming into next year. So we think that all the attention on inflation is ignoring the fact that the Fed has a dual mandate and they're going to be paying more attention to the labor market come this summer and certainly into the fall.
I don't want to put you in the spot, but are you calling for a bear market?
Yes. We have been for a while.
Give me a percentage on that.
Well,
this is America.
The decline, the decline in stocks associated with a normal recession would be on the order of 20 to 25%.
Dude, we had a nice 5% pullback. That wasn't enough for you?
We thought we were on our way. Yeah.
You thought you were on our way. Yeah.
I'm depressed.
I know, but I like this.
I know. Every time I talk to anybody,
because obviously you're non-consensus here. What's kind of the driver there? Because it feels like the economy's okay. It feels like rates are going to be coming down on the margin.
Yeah, the economy always feels okay until the bottom drops out, right? I mean, the amount of time the Fed's going to be on hold in this cycle is going to rival the last time that they held rates this long was before the financial crisis. And that ended up being a policy mistake. They should have cut earlier. But we think that this is baked. I mean, the rapid tightening cycle takes a year or two at least to get into the economy. We're going to get next week, no one's talking about this, but the delinquency data from the New York Fed, that has just continued to move up. Credit card delinquencies.
We'll see what happens with kids in detention? Is delinquency data like they have to go to detention in school? Brian, we got to leave it there. We're out of time. Brian, Nick, thank you so much. It's Rohan Macro, I think, for getting us started here. And if I want to slip my wrist out. Brian, Nick, thank you so much. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. Israeli Prime Minister Benjamin Netanyahu says his country will fight even without U.S. help and that it must continue its offensive against Hamas in Rafah. Netanyahu discussed a potential Rafah invasion in an interview on Dr. Phil Primetime on Merit Street Media.
In the Holocaust, we stood alone, but we were defenseless. And today, if Israel has to stand alone, we'll stand alone.
Benjamin Netanyahu's comments follow President Biden's warning that he would stop additional shipments of offensive weapons to Israel should it launch an invasion to protect the more than 1 million civilians who fled to Rafah. Meanwhile, police have begun dismantling a pro-Palestinian tent encampment at the Massachusetts Institute of Technology. MIT had also started suspending dozens of students involved. The third week of testimony in Donald Trump's criminal hush money trial is drawing to a close. Yesterday, jurors heard the dramatic account of Stormy Daniels' alleged sexual encounter with the former president. Trump denies any wrongdoing, telling reporters that I'm innocent, and he is upset the judge denied a second request for a mistrial.
This judge is corrupt. He's a corrupt judge. This judge, what he did and what his ruling was is a disgrace.
Prosecutors are gearing up for their most crucial witness, former Trump attorney Michael Cohen. Finally, an Ohio postal worker on the job was pulled over for speeding. She was doing over 100 miles per hour in a USPS mail van. Newly released body camera footage from the incident shows a Sandusky County deputy pulling the driver over after seeing her blow past a speeding Mustang.
I didn't realize that I was going that fast.
Yeah. I mean, that Mustang took off. He caught my attention, and then you blew by him, and I was pacing to like 105.
The driver was issued a speeding ticket and a warning. The Postal Service says it is investigating. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
It's a next day delivery, huh?
Yeah.
Same
There's
day.
no way those things can go on.
On a Friday here, it's very important we get out front of equity market movers up 8%. Sweet Green, do you think they're like a Dow Components?
I know.
SG is a symbol.
The kids here at Bloomberg, they're all over the Sweet Green.
Joining us now, surveillance salad correspondent Jess Metton. Come on, Jess. 685 calories of roasted tofu, warm portobello mix, cucumbers, the shrumami. Have you ever
I actually have had it before.
had the
I have
shrumami
indeed
and
actually
sweet
had the shrumami, yes.
None of us. Tucker's never been. Sweeney's
hasn't
never
seen a
been.
salad in
I've
his
never
life.
been. Explain the 2-block line outside Sweet Green and outside Bloomberg.
You know, it's pretty astounding, especially given that where the stock is trading. I mean, it went public and it priced its IPO at $28 a share back in November of 2021. And even in the midst of all the things we talk about with inflation and food prices, people are still lining up to get these pricey salads there.
Did you see the EBITDA margin?
I know, but you walk in there, I don't know how to order.
Oh,
Because
yes.
you have to get you pick your lettuce, you pick your protein, as opposed to saying, can I have some chicken on it?
Right.
So I had to figure out what a protein was. And then you have to have an advanced degree. Finally, I had to have some kid come help me.
So you don't like to just go and get whatever's on the menu. You like to do your own thing.
No, I didn't know. I didn't know how to order it.
How
Literally,
much is
a
a
young person from Bloomberg had to help me out and order.
How much is a shrumami?
Ooh, it's around $15, $16.
15 or 16.
Oh, this is a salad. It's a salad.
Yes, it's a salad.
Iceberg lettuce in the food town
It's
is like $3.
They have the cold salads, and then they have warm salad bowls, and the shrumami falls under.
All right, we'll take you there today, John. We'll do it.
I think, Paul, it says surveillance road trip. I mean, we're not going to the local bar or Subway or whatever. We're going to go down to Sweet Green. $18
Yeah,
for a
I mean,
salad.
stock's up 19% pre-market trading here. It's got a market cap here of $2.7 billion.
Good morning to the 6,000 employees out of Los Angeles. Figures it's out of L.A. Lucas Shaw eats there 8 days a week.
Of course.
Jess Metton, surveillance salad correspondent. Thank you. Futures up 17. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. Some of this Bloomberg Business Flash futures right now indicate a higher open on Wall Street. Dow futures up 94 points. That's a rise of about 0.2%. S&P E-mini futures up 16 points. That's up 0.3%. 40 points away on the S&P 500 from a record close. And NASDAQ futures right now 70 points higher. That is up about 0.4%. 10 o'clock Wall Street time, we're going to get the latest economic data. This is the University of Michigan Sentiment Index Survey. I'm going to dig a little deeper into that when that crosses and look for the inflation expectations. That tends to be that self-fulfilling
It's
prophecy.
going the extra mile today.
Well, Lisa does this. She tells me everything I know. 2-year yield right now unchanged, 482. The 10-year, the benchmark at 446, that also is unchanged. A lot of Fed speak. We're going to listen to Michelle Baumann, Neil Kashkari. Already heard from, according to Reuters, they spoke with Raphael Bostic of Atlanta. He says the Fed remains on track to cut rates this year, 0.25 point. And, of course, Novavax, I'd be remiss not mentioning that, most active in pre-market trading. Right now, it's up 124%. Remember, that's been a pretty beaten-up stock since the start of the year. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
Well, John Tucker, thanks so much. We've had such good discussions recently on foreign exchange. A major shout-out to Stephen Englander, a Standard Charter, who last night put out a research note that really entered the zeitgeist immediately, talking here about some of the challenges of resilient dollar. We continue this conversation now. He's out of University College Dublin, coolest campus in Europe. Yep. Derek Halpenny with us. He is iconic with MUFG. I want to make clear they're a Japanese bank. It's inappropriate for Mr. Halpenny to discuss the executive and intervention processes of the bank. But we're thrilled he could join us, Head of Research, Global Markets EMEA for MUFG. Derek, it's just been way, way too long. Why is the dollar resilient? Is it about the dollar or is it about everybody else?
I think primarily I would point more recently, obviously, to the shifting expectations about the Fed, higher for longer, the resilience of the data, which certainly by January, February time, the markets were not expecting. So this kind of latest leg stronger is more about the US dollar side. But certainly from our perspective in terms of the forecast going forward, I think it's important to remember the broader economic conditions. And if you're going to be in a position to sell the US dollar, obviously you have to have currencies to buy. And up until now, the global backdrop hasn't been particularly favorable. But we think that's changing, not dramatically, but enough to limit dollar buying. And right. Of course, the GDP data today in the UK is one small example.
Exactly.
Of that.
What is the outcome? And Governor Bailey mentioned that yesterday. Derek Halpenny, what does it mean for our listeners and viewers on YouTube if we have a stable dollar? I don't think there's enough talk about this, Paul. What if we get a stable dollar forward?
Well, I think probably most central bankers, for a start, would certainly welcome that. And I think, stable foreign exchange generally is indicative of relatively reasonable conditions more broadly in the financial markets. And I think FX stability going forward would obviously probably reflect a relatively coordinated monetary policy approach going forward. And again, I think for broader financial market conditions, FX stability in that context would be welcomed. So,
Derek, give us just kind of your broad overview of what you have seen with the Japanese yen over the last several weeks. Again, we pushed up on that 160 level a couple of weeks ago, really caught people by surprise here. What do you think's going on out there?
Yeah, I think this is really interesting. Like, obviously, the price action last week, I can say that it certainly looks like there was intervention. That's pretty obvious. And I think there's definitely an elevated level of concern, politically at least, in relation to the depreciation of the Japanese yen. That has an impact on household consumption. It has an impact on household sentiment. And there is still a chance that the Kishida administration will push for a general election before the LDP leadership elections in September. Certainly from Kishida's standpoint, having a general election victory, the measure of victory, of course, we can determine and debate, that raises his prospects of remaining leader after the leadership election in September. So I wouldn't rule it out, and certainly politically there's definitely an elevated level of concerns. And of course we've had this meeting this week between Governor Ueda and Prime Minister Kishida. Ueda has then come out, and the BOJ certainly seems a lot more hawkish now today than they were a week ago, and that certainly raises the prospect of a more active BOJ policy stance going forward from here.
So if the U.S. dollar is maybe stabilized, maybe even if there's a little bit of softness in the U.S. dollar, when you talk to your clients, do they have confidence to go out and buy anything else vis-a-vis the dollar?
Well, you know, look at Japan, and today we've had data on cross-border flows, and you know, foreign investor appetite for Japanese equities remains very, very strong. And again, I think if there's a fundamental, compelling story to tell, investors are interested. Notwithstanding the high levels of rates, notwithstanding the very high level of the US dollar, that points to potential volatility ahead. If there's a real fundamental story, that can trump all of that. And I think that's what's going on in Japan at the moment, where clearly corporate Japan is changing, dividend yields are picking up, share buybacks are picking up, focus on return on equity, right. And that is a compelling story in terms of Japanese equities at the moment.
So what is your 6 months out play on yen? Which pair do you take on yen here to make a speculation?
Well, I think in terms of where we've had probable intervention, and given our view in terms of where the rates pricing across G10 is at the moment, and by that I mean there's more pushback on yields to come back down based on our view that the Fed is going to cut 3 times this year. And given the fact that we think the BOJ is going to raise rates in July, possibly on the same day that the Fed is cutting, I do think there's scope there for dollar yen to move certainly back into the 140s. And for there to be a bigger move than maybe what the markets are expecting at the moment.
We got to get you back. That's 20 big figures or 15 big figures. We got to get you back on. Derek Halpenny, thank you so much. From MUFG there on foreign exchange. I got to swing back to, I didn't even see this till just now, folks. I've been, I'm scheduled to go to Sweet Green for lunch for the first time ever, and I'm really not thinking clearly. Paul, the VIX, 12.82. Yep. I missed that yesterday.
Yeah.
That's stunning. We come from a 19 down to 12.82 in this bull market.
Yeah, exactly right. I mean, it just tells you that people feel pretty comfortable here with this move in the equity markets. And again, what's been driving this move? Again, expectation of some Fed rate cuts. We moved off the concern about a hike, but I think it's really been earnings. We've had pretty solid earnings season here, just kind of nudging this market up.
Can I go all Jean-Claude Trichet on you?
You betcha.
He's from Lyon. Good morning from Lyon. They're listening in Lyon. I think it's Lyon. Christine Lagarde, if you're listening, send me in a pronouncer, please. Yeah. Lyon, I think. France.
Leon from Lyon.
It's no, but it's exciting. I mean, this YouTube global reach
this
thing
internet
is
a
unreal.
global thing.
Denny. Good morning, Denny. From Lyon. They have the best restaurants. I guess, like if you're in Paris, you go to Lyon to eat.
Oh, okay.
And they have great engineering. That's what Jean-Claude Trichet did before he was, of course, revolutionary at ECB. He was, engineering and all that. But good morning from Central France as you get ready for the Olympics. It's very, very. Are you going, Paul? I mean,
no, but I'm looking forward to it because I think it's going to be
can't afford it after the 2 seats coming up at the Knicks.
Exactly right. They're making a big run here. So are the Rangers, 3-0.
Did they win 3-0 last night?
They won in overtime, but they lead the series 3-0, as they say in soccer.
Futures in this Sweeney bull market up 16. The Dow showing futures 39,632. Up 96 points, and that VIX again, 12.82. Even the real yield cooperates, a 10-year real yield from that 218 level down to 2.12%. On Apple CarPlay, on YouTube, subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We wrap up the week with risk-on sentiment, and that's mostly earnings-driven. Right now, the Dow futures up 97 points, up 0.25%. S&P E-mini futures 16 points higher. That's up 0.3%. 40 points away from a record close for the S&P 500. NASDAQ futures right now up 72 points. That is a rise of 0.4%. Economic data today, 10 o'clock, we get the University of Michigan Sentiment Survey and also the inflation expectations numbers embedded in that. Taiwan semiconductor manufacturing seeing April sales jump 60%. World's largest contract chip maker running well ahead of estimates for revenue growth in the current quarter. And also Novavax shares right now 127 points, 128% higher in pre-market trading. Santa Fe and Novavax inking a $1.2 billion vaccine licensing deal. As we look at Treasuries, 2-year yield 4.82, that's unchanged. The 10, 4.46, that's unchanged. And a nod to Derek Halpenny. The yen right now is weaker, down about 0.2%, and takes 155.72 yen to buy $1. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Greatly appreciate that, John. This is the Global Wall Street Geek Conversation of the morning. He's Craig Sterling, and he's with the Monday, and his title, boring, Paul, U.S. Head of Equity Research. That narrows it down. You know how years ago you had to walk around with Dan Yergin's a prize? You didn't have to read it. You just had to walk around with a prize, 800 pages, just to be cool. Or maybe way back, Paul, you had to walk around with Shogun just to show you were sensitive about Asia. Long ago in the world of geeks, you had to walk around with Stern Stewart, which was EVA. It was gospel. Yes, I read it cover to cover like Craig Sterling. I'm a nerd. But the difference is Craig did it at EVA Dimensions now at a Monday, and we're really going to dive in here to where we are on EVA spread right now. Craig, I believe there's a complete re-underestimation of return on invested capital, net operating profit after taxes, et cetera, et cetera. The tech companies, can they endure that EVA spread that makes them once in a generation?
Well, they are. It's super impressive, and the issue is not what they're doing. It's just what's priced in. And we can go across the companies, and there's threats out there. Some are regulatory, some are profits are just too big, and over time, if you have too many profits, your competitors are gunning for you. In some cases, your customers. So it does happen, and these companies, in many cases, are just not priced for that much of a decline.
Years ago, in the certitude of, say, Philip Morris, there was always, well, they can raise prices to protect margins. Can something like Apple or, name any of these other tech juggernauts, NVIDIA, which I don't really understand, Craig Sterling, do they have the ability to raise prices to protect margins 5 years and 10 years out?
Well, they can. If you're providing value, you can raise prices, but there's a limit to that, right? I mean, companies can only do so much before you start alienating your customers. And even for some of the companies you mentioned, some, if they only have 3 or 4 customers, those customers in many cases are going to try to do it themselves. And then if you're selling handsets, there are other games in town, so you can only do so much. It all comes down to, and this applies not just to big tech, but just across the market right now with what we're seeing, maybe with consumer stocks, is you have to provide value and innovation. You just can't keep raising prices, and because that will only work so much until you start seeing your volumes, flatten out or decline.
Hey, Craig, in this market, there are a lot of our listeners, a lot of our viewers that have only known tech as the leader in the equity market. Is tech still the sector that can lead this market higher?
We don't really think so. I think you got to be really careful right now. They have just crushed it over the last 12 months or so. But right now, this group of stocks, it's crowded, it's over-owned, they're expensive. There's a big bifurcation in the market right now. And I would really encourage your listeners to look underneath the surface of the market. There's a couple things playing out. The average stock has not done much in the last 12 months or so. And part of it is deserved. You know, the big stocks, the Mag 7, they had a really nice earnings recovery in the last 12 months or so. They were the first ones to get hit with a profit recession a couple years ago and the first ones to come out. And, you know, while most other companies were dealing with kind of the indigestion from COVID, whether it's supply chain issues, worker shortages, and then inventory drawdowns, that's all kind of working itself through and complete or almost complete. And I think what you're going to see as we get later into 24, a big, sharp earnings recovery for some companies that have been dealing with their own recession so far. And we're pretty excited about it.
Well, if tech's not going to be my leader, do I have to go look at something like a chemical company or something like that, like the cyclical companies? How should I think about it? Where should I look for some opportunities or some leadership?
Yeah, chemicals might not be super interesting at your barbecue this weekend or over Memorial Day, but you know that's a good area. Or analog semiconductors, you know, different types of semis than are provided for AI. These industries have had a really hard time in the last year or so because their customers built up inventories when there was scarcity, and now they're drawing down the inventories. And you know, as the economy gets through whatever we're working through right now, they're going to have a sharp earnings recovery, and that's going to drive performance of stocks because these earnings has like driven the bus over the last 12 months or so, and it's going to be pretty powerful.
You know, I love this. I wish, Craig, we could go for like 2-3 hours here, but we can't. But Craig, to your good point on, say, analog semis, and I'm going to go to Texas Instruments. This is off my book of the summer, Chip War, by Chris, mental block right now. But Chip War, it's a great book. And Craig, the bottom line is, say, at Texas Instruments, Rich Templeton's the chairman, Javier Ilan is the president and CEO of Texas Instruments. Are they running, in companies like them, are they running ever more for capital allocation and return on invested capital, or are they running for the press conference and the earnings beat? To me, it's sort of a jumble right now.
Well, semis are interesting. Again, there's a lot of different types of semiconductors out there, but these companies, most companies are being run very capital efficient. You know, investors are not letting them do things in the past that may have destroyed returns on capital and hurt future growth and ultimately their share price. Companies are being well run, not all, but the ones that aren't, we see activists come in and I think you're seeing these companies well run. And in analog semis, you know, this is an industry that is generally well run. It's gotten more concentrated in recent decade or so.
Right.
So you've got the winners that have done a good job, and you know, you look at a company or an industry like chemicals or energy, which have not been great stewards of capital over time, but these companies are competing way more rationally, not spending just to spend and grow, and the investors are going to start rewarding this.
I can't say enough, Paul. This is the discussion for 2026. Craig Sterling's way out front on this. Like, Paul, should they issue bonds to buy back stock?
Yep.
Is that an efficient adjustment of capital? Don't give me your M&M theory here. There's no green M&Ms in the surveillance studio.
Absolutely not. Hey, another area I just wanted to ask about is banks. You know, I mean, I'm looking at positive net interest margin here. I'm hearing Jamie Dimon and Brian Moynihan talking about pickup in deal activity. It seems like the profit picture for banks could be pretty decent. What do you guys think about the big financials?
Yeah, the big banks, we like a lot. They all got tripped up, you know, some more than others back about a year ago when we had a big mismatch on the balance sheet. But we believe a lot of that was the stock price movement last year was kind of unwarranted. And what you're seeing is these companies are going to demonstrate to be much more stable businesses than the market's given them credit for. You know, when I was a kid, and presumably you guys as well, you know, banks were considered safe companies like Staples or telecom or pharma. And they went through the financial crisis, came out of it. And what they keep demonstrating through each of these crises since the financial crisis is a good business, you know, stable business, wealth management. They're managing their balance sheet and their capital well. They're returning capital, something we're really excited about.
Craig, this has been fabulous. It'll be featured on my podcast today. Craig Sterling with us. He's with him Monday, but it's just iconic at EVA Dimensions and Credit Suisse over the years. Craig Sterling there. Futures up 17. The Sweeney Index, 39,625 on futures, up 88. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, John. Israeli Prime Minister Benjamin Netanyahu is reacting to President Biden's public warning about an Israeli attack on the southern Gaza city of Rafah. The Prime Minister spoke with television host Dr. Phil and discussed responsibility for the October 7th terror attacks by Hamas that sparked the war in Gaza. Netanyahu on Dr. Phil Primetime on Merit Street Media says, if we have to go it alone, we will go it alone.
And I think we're going to have a thorough examination once the war ends of exactly what happened, how it happened, and who made it happen. That's something that you have to do. But I think right now our goal is one, to achieve victory.
President Biden announced earlier this week that he would not supply certain weapons to Israel if it launches an invasion of Rafah, where over 1 million Palestinians have taken refuge. Police have cleared a pro-Palestinian encampment on the campus of MIT. Officers moved in early this morning surrounding the perimeter of the camp and then took some people into custody. Several protesters were arrested in the incident. Student organizers with MIT Jews for Ceasefire say this will not stop them from calling on the school to cut financial and research ties with Israel.
This is not in any way going to diminish the movement. We're stronger than ever. We've seen that MIT will do anything, even threaten the well-being of its own students, over divesting from this ongoing genocide.
Meanwhile, protesters at Harvard University vowed to continue their encampment after talks with school officials collapsed. Demonstrators have demanded Harvard divest from companies linked to Israel. Testimony from a former Trump White House aide continues this morning at the former president's hush money trial in New York. Yesterday, porn actress Stormy Daniels concluded her testimony after hours of questioning over 2 days. Global news 24 hours a day and whenever you want it. With the Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Greatly appreciate that. Paul, we got to stop the show because you live this, and I live this. There was this revolution of what the seminal book, folks, is Graham Dodd and Cottle, including Warren Buffett's wonderful introduction years ago. And we all read it about railroad stocks, and this is what our grandparents basically read. And then there needed to be a new theory, folks, about what do you do at a corporation if you're a CEO, a chairman, a board, whatever. And the religion that we lived decades ago was economic value added, which Craig Sterling is truly expert at. And it's still to this day, the financial media fights talking about a ratio like return on invested capital. It's just too complex.
Yeah, well, I mean,
and that's what everybody does.
It's a simple concept. I think, certainly if you're allocating capital, if you're, a CFO and a CEO, where do you allocate capital in your business? You go to presumably the places that can generate a return on that capital in excess of your cost of capital.
Right.
And that's economic value added. That's how I kind of understood it, simplest terms.
Right.
It's harder to do apparently in practice than that simple statement, but that's kind of what I think investors want their management teams to do.
We're really committed on this, folks, in our earning coverage. I'll make no bones about it. Scarlett Fu owns the high ground on this. But the earnings coverage, when I hear the phrase, folks, it's an earnings beat, drives me insane, because Paul Sweeney knows the earnings beat was completely jury-rigged by the PR department of name the company.
Exactly.
It drives me absolutely insane. Scarlett Fu, I think, just doing the best job we have on earnings out there. We'll continue to do that, try to give you more off the Bloomberg terminal than just, it's an earnings beat. Craig Sterling, that was just wonderful. We'll feature that today on Single Best Idea. Futures up 16, Dow futures up 85, the VIX under 13, 12.82. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are being brought to you by Interactive Brokers. Interactive Brokers charges U.S. dollar margin loan rates from 583 to 683, rates subject to change. Learn more at ibkr.com/compare. After yesterday's 0.5% climb for the S&P 500, futures indicate a higher open on Wall Street this morning. S&P futures right now up 16 points, a rise of 0.3%, 40 points away from a record close on the broader index. Dow Jones Industrial Average, those futures 85 points higher. The number to watch for the Dow, again, 39,807. That would be a record. And right now, the NASDAQ futures, 70 points higher. That is up 0.4%. We remain later this morning. We're going to get the next piece of data, University of Michigan Sentiment Survey. That's out at 10 o'clock Wall Street time. And a couple more Fed speakers today. We'll be on the watch for that. That comes ahead of next week's important inflation data. That would be the CPI. 2-year yield right now, 4.82. That's up 1 basis point. 10-year yield, 1 basis point higher. That's at 4.46. And again, Novavax, most active pre-market, up 122%. I need to mention this. Kind of a business story, very important on Mother's Day weekend. Severe solar storm.
Yes, a
is
G4.
Expected.
Yes.
Yeah, so the first time since January 2005, the U.S. Space Weather Prediction Center has issued a G4 geomagnetic storm watch.
What does that mean for us?
It's serious
I mean,
stuff.
it could
First of all,
affect the grid because you have positively charged ions coming this way, and that messes
when
up.
James Michener wrote Space a million years ago, he brought this up because the major risk to the astronauts was not like the engines didn't work or whatever. The major risk was solar storms when they were in the lunar module, not the metal capsule, the Apollo capsule, but the thing that landed on the moon. You know, they go into it, and, you know, it's in the movies. You know, and Tom Hanks is expert at this. And the answer is solar storms are serious stuff. I mean, but on Mother's Day, the solar storm concentrates on Dior and Tiffany is where it's like a powerful radiation storm there. We're looking for the solar storm.
Can you hear my eyes rolling in the back of my head, Paul?
John Tucker, thank you for that important news. The walkway from Dior to Tiffany, Constant Hunter knows that right now and joins us from macro policy perspectives. Constant, I think the debate this weekend is shockingly rich. And the great tipping point, if you will, are economists looking for resilient inflation versus just in the last 48 hours, a reaffirmation of a disinflationary trend. Where are you and Julia Coronado in that debate?
We are definitely in the disinflationary trend camp. But the other thing that is an important factor for the Fed is which is going to show weakness first. Is it going to be the labor market, or is it going to be the month-over-month change in CPI? Now, we think by June, we're going to be looking at CPI month-over-month that's about 0.15% month-over-month, and they will have that data by their July meeting. The question is, will that give them enough confidence to move in July? And that is a coin toss. It may not. They may have to put it off until September before they cut rates.
Constance, I'm looking at the U.S. economy here. One of the terms I hear a lot is productivity, the improved productivity in the American economy. Is that what accounts for maybe the economic exceptionalism that we hear spoken about, the U.S. economy versus, say, Europe and Germany, or Asia and China? Talk to us about productivity in the U.S. economy.
Yeah, that's a great subject, and it's really not well understood by economists, I will say. And the reason I say that is because if we understood what got us good productivity, you would see every government enacting policies to raise productivity. However, that doesn't mean we're completely flying blind, right? We have some idea, and there's a few things that are happening here in the U.S. One, we are the world leader when it comes to artificial intelligence. And I'm not just talking about generative artificial intelligence, but all of the artificial intelligence. We are so far ahead of every other country, including China, by several orders of magnitude. We're about 5x above China in terms of investment, in terms of patents, in terms of companies. And so that is giving us a huge advantage. In addition, we've had this new business formation that has been very strong, right? We had it rise right after the pandemic. It's continued to be very strong.
Okay.
And it's a number of different industries.
You know, I'm drinking the Kool-Aid with you, Constance Hunter, but I think I saw a chart out in the Zeitgeist. I'm sorry, I can't cite it. I'll give Keene over at the Death Star. I'll give Carl the credit for it over at CNBC. But the bottom line, Constance, is small business is flat on their back. How do you tilt as a macroeconomist the buoyancy of tech America with small business and an NFIB flat on their back?
True. The NFIB survey definitely shows some weakness, and even if you talk to Bill Dunkelberg, he will say that it's a lot of legacy businesses. I don't know how many of these new firms are running out to join NFIB and to join their survey, right? They do a very good job at normalizing it out to try to for the whole economy. But if you were making trades off NFIB for the last decade, you might not have had the best.
Fair. I got my haircut. Moses does my hair at Delta.
Moses.
Yeah,
Nice.
Moses does my hair at Delta. He's like unbelievable. It's like old school. The kids go there. The Upper East Side kids, they go there and they, it's like he makes these kids out of Central Casting. I can't see Moses at Delta on Lexington Avenue worried about AI.
No.
I don't think he's.
But he's the only one that's not.
And that is one thing that robotics is very, very far behind where people thought it would be.
No robot has given me a Moses shave. Let me make that clear right now.
No, they can't even fold sweaters. And you remember these guys, Osborne and Frey, in 2013, where they forecast 50% of U.S. jobs would be gone by 2025. I just did a piece out on LinkedIn where I talk about how, in fact, most of the areas where they forecast declines, we've actually seen dramatic increases. But there are two exceptions where we've seen a surge in online shopping, and that is at furniture stores and apparel stores. And that wasn't just because we had this progression of technology, it's because the pandemic shocked us into different behavior. And so this ties into the full productivity story where the pandemic really shocked us into different behaviors. So look at us doing the radio here, being live on television. I'm in one place, you're in another place. This didn't happen with the same ease prior to the pandemic. That adds to productivity.
So can we get rid of can Eric out the door, Bob out the door? Can't get rid of Fellio, but
toss us out the door.
I mean, if Tucker, see ya.
Yeah, exactly.
I wish I were somewhere else.
Hey, Constance, let's kind of go to the consumer here. We're going to start hearing from Walmarts of the world next week in earnings and a lot of the retailers. What's your view there of the consumer here? Is there a bifurcated consumer? Is there an overall consumer? How do you think about it?
Yeah, it's very much of that K-shaped recovery, right? So, the lower end feels the pinch of the higher rates more. They're much more likely to finance purchases of durable goods, like, whether it's appliances, automobile, right? So much more likely to be leasing automobiles, for example, and much more likely to be renters. Now, in the rent category, yes, they're feeling some relief. Fortunately, on the gasoline category, we're getting some relief there. And of course, if inflation continues to moderate, that provides a sense of relief.
Right.
But it's that step level change from pre-pandemic that people anchor to. And so that you're definitely, and you're feeling it, and that's where you feel the pinch of higher interest rates. The upper end consumer is feeling more confident and more comfortable and has more means. But I think there's still a psychological resistance to the level of inflation many people are seeing on many things.
Okay, this has been great. Constance Hunter, thank you so much. Really, just a superb hour there. Constance Hunter, macro policy perspectives. Paul, just quickly here, the nuances, the richness of the debate into this weekend is extraordinary.
Yep.
It's just, the markets are dead. It's been like liquidity is like zero, right?
Well, you got your
volume.
You got your VIX, Tom, at below 13.
12.79 on the VIX. We had a major folks pie yesterday. It was William Joel's birthday, and I had to play Lullaby because Emily, who was with us for years. I mean, Emily invented Bloomberg surveillance. She's in the Lullaby video. Raina had a complete meltdown at home and said, "You didn't play Uptown Girl, Raina. Good morning."
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney back in the saddle here. Paul Sweeney, Dow 40,000. He called it. Paul Sweeney and Tom Keene, good morning on Bloomberg Surveillance. I'm tearing up here, folks. I mean, let me give you some inside baseball on Bloomberg Surveillance and how we do this. Paul, this entire show, including this blockbuster half hour, Dan Ives and Jim Bianco, is booked with baby Giuseppe on his lap.
Really?
The entire show is booked with a baby on his lap. He's got the phone, you know.
All right,
he's got the
good.
bottle doing here with baby Giuseppe, and it's amazing, folks.
Good stuff.
How we do that.
Are we sure it's Giuseppe?
Yeah, I think it's Giuseppe. Yeah, absolutely. Anyways, good morning, Eric, and baby Giuseppe. Good morning, Mom. Thank you, because it's a great Friday here. Jim Bianco with us here in moments. We're on Apple CarPlay. It's our new digital effort with Android as well. Can't say enough about it. It's in new cars.
Yep.
People are demanding it. Demand it as well as you can. On YouTube, subscribe to Bloomberg Podcast. You go and you search Bloomberg Podcast, subscribe. And we're live. We have a replay now. Jim Bianco called up in a tantrum. I don't know, he's Cubs or White Sox. I can't remember. He's calling from Comiskey Park, and he's saying, Tom, I need a replay out in Chicago, the time difference. So we've got that going, and we say it's a new digital world. We say good morning to that. Bloomberg Surveillance this morning. Brought to you by Cohn Resnick Advisory Assurance Tax. Let Cohn Resnick's Enterprise Risk Advisors help you build confidence in your supply chain using data analytics. Visit CohnResnick.com. Thank you, Cohn Resnick, for just continued support of economics, finance, and the Bianco inflation call that we have. With our Bloomberg Business Flash, half of Lisa Mateo, John Tucker.
All right now the Dow futures 87 points higher. That's up 0.2%. Remember, after yesterday's 0.5% rise for the S&P 500, 40 points away from a record close on the broader index. S&P E-mini futures this morning 16 points higher. That's up 0.3%. NASDAQ futures, they are up 72 points. Next piece of data, we're going to get that at 10 a.m. Eastern. The University of Michigan Sentiment Index, and of course CPI. That's the big inflation report next week. Ahead of that, we're going to hear from a couple of Fed speakers today. Already heard from Raphael Bostic saying the Fed remains on track to cut rates this year, at least a quarter of a point. And your Novavax update, most active in the pre-market. Those shares right now up 119%. Zeekr Intelligent Technology Holding, this is the high-end electric car brand under Geely Holding, expanding its initial public offering to raise $441 million. This is the biggest U.S. listing by a China-based company since 2021. They sold 21 million American depository receipts shares, that is 3.5 million more than it had planned. Again, Dow futures right now up 85. 2-year yield 1 basis point higher. That's at 482. The 10 2 basis points. That's at 447. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Without question, the person that's nailed the many fan distributions of inflation is Jim Bianco. His call, I'm going to call it 18 months ago. No, it's not going to be a path to 2%. I'm sorry, Chairman Powell. There will be a resilient inflation. Jim Bianco joins us now in our studios, caught between the White Sox and the Cubs. Jim, thank you so much for joining this morning. Give us an immediate update here on the fan distribution, the probabilities here of inflation 1 year out.
Yeah, it's looking like that last mile is really running into trouble here, because using CPI, we're stalling it somewhere around 3.5%. And if you go to what the economists call the base effect, the numbers from last year were very low, and we're going to stay there. And that's going to be problematic for a Fed that is looking for confidence to cut rates.
Right.
They're going to continue to see sticky inflation, and that's probably going to keep them on hold, I think, for the rest of the year.
I think we're at a tipping point. I think the zeitgeist here is so important this weekend, folks. It's not another boring weekend in May. There's something really big going on. It's in the Midwest is what's doing this, Paul. Lindsay Pieggs over at Stifel says, do not discount a rate increase. Take the Bianco resilience of inflation and fold that over to any probability of a rate increase from here.
Oh, I think the probability is above zero that we're going to have a rate increase. But I don't think it's quite at that 50% level that you would expect one. But we are probably closer to that than a cut right now. The data is just not there for a cut. I mean, one payroll report that came in below expectations, it was still 176,000 jobs. And that's nothing that you would look at and say, this economy needs more stimulus.
So I think my Fed should be cutting now. What, do you disagree?
If you start cutting now, well, let me back up. We all have this expectation.
Granted, I want to refinance the mortgage on the Jersey Shore compound, but
right, okay. Exactly. And this is what I'm going to get at. We have this perception that if the Fed cuts rates, candy falls from the sky and all good things happen. And so why wouldn't they do this? Why wouldn't they give us the free candy? If you have an inflation expectation or inflation problem and you're perceived as not dealing with it and stimulating, if they cut now, you produce higher interest rates. The bond market rejects that kind of thought. If the bond market is totally in on the idea, inflation is done, we're going to 2%, you could cut all you want. So that's the key, or that's the rub that they have to be careful of. You cut when the market is worried about inflation, and you wind up making higher interest rates, not lower interest rates.
So what are we doing in the bond market? I think you've been kind of a bond bear-ish.
Yes.
I don't know. Explain your bond call and how that's changed, maybe.
Yeah, so I think we're in a long-term bear market in bonds, meaning many, many years.
Bond prices go down,
yields go up,
okay,
and they have been since 2020. But you can also have periods where you can have a big rally in the bond market. I started the year when we were under 4%, saying I thought we would have higher yields that would go to 5% to 5.5%. Well, 470, if you will, I kind of moved to neutral, only because most of the move is over. I still think we could probably get to 5% on yields, but I think that at that point, it might actually be a good entry point for people that are looking to buy bonds.
What does nominal GDP do with a resiliency in yields? I mean, do you just model out a sustained 4% GDP where the haves continue to prosper?
Yeah, or maybe even 5%. And with a 4 or 5% nominal GDP, you're looking at a 450-ish 10-year note right now. That might be kind of a neutral rate that we're looking at. So, you know, if we got down near 4, that would be stimulative. And, you know, once we start getting above 5 on the 10-year rate, that would be somewhat restrictive. So in this environment, we have to be cognizant that these interest rates are the interest rates that we should get.
You're in Chicago. I make jokes about it, but the fact is this is a huge bone. These people aren't on Wall Street. And Jim Bianco, if I look at a 4+% nominal GDP, how does broad America, non-financial America, how do they doing that? Ed Yardeni says it could be the Roaring 20s.
Well, you know, let me divide the rest of the country into two parts. Those that are in the upper half of income, they're going to see higher money market rates, and they're going to see higher interest income rates. They're going to make more money because they're going to see more interest income. Those in the bottom half of the country that tend to borrow more, they're going to have to pay more. This is the stress point that we see in the country right now, where the economic data looks good, but if you look at the president's approval rating, it's low because it's still one person, one vote. So people at the top end, they're getting interest income, they're spending. People at the bottom end are paying interest because they've been borrowing. And that's why inflation is such a problem that keeps interest rates up.
All right, so if I'm thinking about the credit markets here, do I just jump into a 2-year note here, which I can get at 4.82% from the U.S. Treasury, or do I take some credit risk out there?
You know, as far as credit risk goes, actually, when you said about a 2-year note, I was thinking, how about a money market fund at 5.3
you're right.
without any kind of risk whatsoever? Ultimately, I do think that there will be a point if rates were to move higher that there will be an opportunity to take some risk and get some return in the market. The nature of the bond market has changed in the last couple of years that we now have a yield again in the bond market. And every time a bond investor looks at it, they got to say, look, I could start with a 5% yield, and then if I do some stuff around the edges, I could do a little bit better than 5%. If I do it worse, I could do a little bit worse.
Then why are we at a record high? I mean, essentially, we're within 1% on any given index of a new high. Why?
Because these rates are not restrictive. We look at 5%, and there's a perception that this must be hurting something.
It's not.
No.
Every anecdote I have from corporations is they're loving the environment.
Right, and even better, they're getting interest income. Warren Buffett's got $179 million of cash, in which he's making something along the lines of around $10 billion or $8 billion to $10 billion a year in revenue, where $179 billion would have got nothing 3 years ago.
I want to save a couple of minutes on this. I did this in my podcast, Single Best Idea, yesterday. Wendy Schiller of Brown University was brilliant. And this is off the Jim Bianco remit, folks, but I'm irresponsible if I don't ask it. We have a Democratic presidential convention in your Chicago this summer.
Yes.
I have political experts not saying it's going to be a redux of 1968, but the tensions within the country could make for a really difficult tension. How is Chicago getting ready for the convention? Is there a tension out there that there could be a lot of protests?
There is a big tension that there's going to be a lot of protests. The number that's been bantered about was that we all remember the 68 convention. Mm-hmm. That there was something like 5,000 protesters that caused all those problems in 68, and they're talking maybe as many as 30,000 this year in Chicago. And it's going to be a difficult one for a democracy if they have to put National Guard troops on the streets in order to kind of corral that kind of a crowd. But it is a big concern right now. You know, just from a municipal standpoint, living in Chicago, should I leave for that week, is what people are asking me, my neighbors.
Wow.
Is the congestion and the hassle, if you're not involved with the convention, going to just not be worth it?
Jim, this has been wonderful. Jim Bianco, thank you so much. Live in our studios, usually to the Midwest, the land of Diane Swank, but we're just thrilled that he's here, Bianco Research. I really can't say enough about his call of the year last year on resilient inflation. Paul, 11 out of 10 experts thought Jim Bianco was nuts.
Right.
And, here we are. The last mile to 2% is difficult. Richard Clarida earlier this week was brilliant on this. He says, we're not going back to 2.00.
I don't know what the big thing is about 2.0. I've never really gotten a great explanation. Something 2 to 3%. How unreasonable would that be to live our life?
There's a raging debate, but to make it short, we've actually had a period where we were beneath 2%.
Yeah.
So the 2% sort of a liberal interpretation, but that's open to wide Jim Bianco-like debate. Futures up 15, Dow futures up 88. What am I highlighting today and into the weekend? It's simple. The Sweeney, Dow 40,000. We had a close of 39,387. Futures now up 0.2%, with the usual futures higher 39,624. I haven't seen a bull market uncelebrated like this Friday, Paul.
Yeah,
I simply haven't seen it.
It's kind of that classic wall of worry that this market seems to be climbing here. And I think the driver over the last, several weeks has been earnings, Tom. Right. Pretty solid.
To Jim Bianco's comments, the real yield comes in from a 217, 218 to 2.13. You heard him say, yeah, yields are up here, but we are not restrictive. That's a key point as well. The 10-year yield 4.47%. We're on Apple CarPlay, Android Play as well on YouTube. Subscribe to Bloomberg Podcasts, and we're out there. Look for it live and worldwide. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk on today as we end the trading week. Dow futures right now up 93 points. That's up 0.2%. S&P E-mini futures 16 points higher. That's up 0.3%. NASDAQ futures right now up 72 points. That's a rise of 0.4%. In the driver's seat, we have earnings. And over in the passenger seat, not too far behind, we also have some Fed speak. Traders going to be watching for hints of any timing of policy easing. Michelle Baumann and Neil Kashkari among the speakers today. Raphael Bostic of Atlanta already telling Reuters that the Fed remains on track to cut rates in 2024. You just heard there from Jim Bianco saying we're closer to a hike rather than a cut. As you look at Treasury yields, the 2-year 4.82, that's unchanged. The 10-year 1 basis point higher. That right now is at 4.47. 10 o'clock Wall Street time. We're going to see the University of Michigan Sentiment Index, and within that, also the University of Michigan 1 year and the 10-year inflation expectations. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Appreciate it. Okay, I'm going to break a rule here, folks. Usually, because they're always so product touchy-feely with Apple, they go to Dan Ives and they go, should I get the brown one or the red one?
Sure.
I don't do that. I do financials and can you make money or lose money in Apple and all that. Right now, I'm going to rip up the script with Daniel Ives. He's with Wedbush on Apple. Dan, Apple Insider, Mark Gurman, any others, they have a lot of paragraphs right now on what AI is going to do for the iPhone. Is it nothing more than a glorified search engine enhancement?
I disagree. I mean, I think this is the start of a game-changing strategy at Apple with AI, and I think it's going to be on AI services as well as on the iPhone. But Tom, they're not putting their new chip to focus on AI if this is just for enhanced search.
Okay, well, what's it for? I mean, right now on a Friday in May, Paul, you mentioned the June meeting is like, Ives goes to that. He wears a tuxedo. You should see the color of that tuxedo. Dan, I think there's a mystery here on what AI is going to mean for the public on the toy they all carry around. Do you agree at least that there's a mystery?
Yeah, but I think the mystery and the popcorn moment, that's going to be revealed at WWDC next month by Cook. I think it's going to start what I really view as probably the most important event for Apple in a decade, because it's unveiling AI on services, what I believe is going to be a new AI app store, and the start of it, and then what's going to be built into iPhone 16 from an LLM perspective.
Hey, Dan, and Tom, I bumped into Dan at Newark Airport yesterday. I was going up to Boston. He's getting off the red eye from San Francisco. No idea what's going on. He's all over the place.
In Middletown?
He's all over the place. I have no idea.
I mean, the Wedbush Gulf Stream usually doesn't go to Newark.
I know. But yeah, he's flying with the people. Hey, Dan, when you talk to investors, what's the biggest challenge here for this stock? I see it down 4% year to date, which for Apple is really, really underperformance. Is it China? Is it AI? How do you prioritize kind of what Apple needs to get right over the next 1 to 2 to 3 years?
Yeah, Paul, it's a great question. Look, I think it's China, because that we're used to seeing that as growth, and it's actually been negative. But if you look out over the next 6-12 months, the headwind becomes a tailwind. I mean, China, I think, starts to grow next few quarters. June will be its last negative quarter. And that's why right now, New York City cab drivers bearish on Apple. But you have this pent-up upgrade cycle, 270 million, that haven't upgraded in 4+ years, plus now AI coming to Cupertino with a $110 billion buyback. I mean, that's like going up against Brunson in the playoffs.
Good analogy. Mike, the concern in the back of my mind, Dan, and I'm guessing I'm not the only one, is this growing, I guess, Cold War between China and the West. That's spilling over into consumer behavior, and maybe people on the margin are not going to buy Apple products to the same degree they did in the past because of that. Did the numbers show that at all?
I think the the doomsday scenarios never really came true this quarter. I mean, and I think that was evident because, yeah, they have some geopolitical headwinds, the Huawei issues, but you build the best products in the world like they do, consumers, whether they're in China, New Jersey, or wherever else, they're going to want iPhones.
All right, so at this developer conference, how do you think it's going to play out? Because it feels like they're always important to Apple, they're always important to the stock, but this one, because there may be this AI component, what would you like to see happen at this June get together?
Yeah, and Gurman's talked about this, but this is all focused on developers.
Yep.
So the big thing here is really them unveiling a foundational platform for developers where they're going to build AI apps within the App Store. And what that's really going to do, I mean, and Keene's talked about this a lot, but as AI comes to the consumer, it has to come through Apple. Till Apple dives into deep end of the pool, AI, and then it all starts June 10th.
I feel like I'm doing an Ed Ludlow conversation. This is so non-Tom Keene. Dan Ives, so are Google and Apple frenemies right now? I mean, if they need the Google platform to make AI happen, forget about the regulation and the litigation. This weekend, they're going to chit-chat over an expensive latte out in Cupertino. Are they frenemies?
Oh, I mean, I'd say they're just actually friends. And to some extent, that's getting closer and closer because they need each other. You look, Google needs Apple, just like Apple needs Google. And that's something when it comes to AI, what's made them more BFFs is actually Microsoft. Because as Microsoft has aggressively really led this, it's actually forced Apple and Google to look in the mirror and realize instead of enemies, they're actually friends.
The great thing about chatting with Dan Ives, Tom, is you can just go all over the place here. So I'm going to switch gears.
They're tearing him up in the live chat. Everybody wants to know where he got his shirt.
I mean,
they don't care about Apple. They just, did you get that at Lord & Taylor? That's what they want to know.
No, I got this one in Milan. This is like a Paul Sweeney special, right, from Milan.
Oh my
John Tucker, can we have Dan Ives' life? What
if luxury for me is like LL Bean
at the thrift store.
Can you see Dan Ives in LL Bean?
No, of course
I
not.
can't.
No, they don't have the colors there.
Paul.
Hey, Dan, I'm looking at our good friends Tesla stock down 30% here. How does that narrative need to change for Elon, over the next several quarters here to get this stock moving?
Yeah, look, I mean, obviously it's been a dark few quarters, but I think it all started with this last conference call in terms of turning it around. What I view as a sub $30,000 vehicle next year. They've had to make some difficult cost cuts, but now I think growth will start to return in China. That's the key. And then you look at this time ahead, it's really full self-driving autonomous. That vision now is starting to become something closer to reality. And that's the longer-term Tesla story here.
Right.
Is that, they've been through this before. This is not the end of the Tesla growth story. It's still second, third inning.
Dan, I got to get some news out here. I mean, you're in the office. You go back to your house. I understand you're published at any moment. You're out at a 250 on Apple. Can we make some news here with a price lift? Can you give me 270 here on Bloomberg surveillance?
Well, what I will tell you, Tom, I think the AI story is worth $40 to $50 per share to the Apple story. And that is not being factored in here. Sentiment's negative, and I think we sit here a year from now, and that's going to be what I view as the game changer. It's the underestimation of Cook and Cupertino with AI.
Can I put a headline out? Ives of Milan.
Yeah,
says
sure.
Apple $300 a share. Did I hear that? Dan Ives, thank you, with Wedbush.
We'll have to wait for his note.
Yeah, I don't know what to say. I've never done that, folks. I've never done more touchy-feely with Dan Ives on Apple, but I think this AI thing, a real mystery and a real debate out there. We'll continue with that debate. We do it on Apple CarPlay, on YouTube. Good morning, Google. Search Bloomberg Podcast. From New York City, Bloomberg Surveillance. More coming.
Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Good, I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. Risk on as we wrap up the trading week. Dow futures up 101 points, up 0.25% right now. The S&P E-mini futures 19 points higher. That's up 0.4%. Again, 40 points away from a record close for the broader index. The Nasdaq futures right now, they are up 0.4%, 79 points higher. Yields right now, they are rising 2-year. That's up 1 basis point. That's more policy reactive. That's at 483. The benchmark, the 10-year yield, that's 3 basis points higher. We're at 448. After yesterday's rally for the S&P 500, up 0.5%. We later this morning going to get the next piece of data from the University of Michigan, the sentiment index. Also within that, the inflation expectations. Did hear from Raphael Bostic, the Federal Reserve Bank of Atlanta. He says the Fed likely still on track to lower interest rates this year by 0.25 point. And Novavax shares, most active in the pre-market, pairing some of the earlier gains, now up just 110%. Live Nation set to meet with senior Justice Department officials in the coming weeks. They're trying to stave off a potential antitrust lawsuit to break up the company, but Bloomberg writes this morning that's not likely to work. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tom and Paul.
Who would think to put Live Nation together in the first place?
Well, Jen Rhee, our antitrust lawyer and Bloomberg intelligence expert, has been telling us for a very, very long time this is the next big antitrust action to take
We were
place.
shocked that we got that deal approved.
Yeah.
Did you get your tickets for Taylor in Paris?
No, not
No,
gonna. I
didn't
just,
get those?
No,
Okay.
I did not get.
Francine has a golf streak.
Oh, I'm
this
sure she
weekend.
does.
She's going in. Our economic indicators, and look for them 10 a.m. this morning. Important statistics from Michigan into CPI, PPI next week. With our leadership from Commonwealth, we say thank you. Our economic indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. So, in the River Cambridge, there's a course called Ec 10. And so you go in and you get ManQ Light. This is years ago. Now it's Jason Furman. You go in and you get ManQ Light, and there's a little bit of algebra, y equals c plus I plus g. There'll be a quiz. Or you go further. David Mericle is one of the toughest PhDs in the land under Greg Mankiw at Harvard with Goldman Sachs. David, thank you so much for joining. I want to get to immigration in a moment. How much algebra was there with Mankiw? I mean, I can't fathom the algebra rigor you had to put up with under Greg Mankiw.
Well, you do move from algebra to calculus when you stick around long.
Okay, well, David, thank you for being with us. Your essay on immigration is the debate of the moment for this nation. With your research at Goldman Sachs, can you say that immigration has moved the needle on our labor economy?
I think it's clearly had a mechanical impact on things like job growth and GDP growth. That part's pretty easy. More people, more entrants to the workforce, you can put more people to work, GDP can grow a little bit faster. Maybe the more contentious part is what impact all of this had on wage growth and inflation, where we saw a big increase at a time when immigration was extremely low because the borders were closed and fewer people were coming. Then we saw a big decline in wage growth and inflation when immigration surged, and it naturally raises the question, is there some link there? My take is it probably did play a modest and secondary role as one of several factors. But I don't think it was the main story. Normally, a lot of people, I think, quickly think of immigrants as, well, you have more workers, that should help to rebalance the labor market. Economist is, of course, going to point out, well, now that they've come to the U.S., they're consuming in the U.S. as well, not just producing in the U.S. So you've boosted both supply and demand. And under normal conditions, I'd probably say, as I think most people would say, that it would be a wash, that it doesn't matter too much, that when we economists and markets think about forecasting wage growth and inflation, this is just not something at the top of our list that we're considering. I do think this recent episode, though, was a little bit different, because if you remember back to the beginning of the immigration surge, we had probably the tightest peacetime labor market in the history of the United States. So I think under those unique circumstances, where you had a huge supply-demand imbalance in the labor market, and in particular, the low-wage part of the labor market was just red hot, generating really hot wage growth. Under those unique circumstances, I think it's fair to say that an influx of another million, mostly low-wage workers, probably helped.
Paul?
So, David, given that backdrop here, how would you characterize the U.S. labor market? We've got, a headline of 3.9% unemployment, 3.8% unemployment. How do you characterize the labor market? How do you think the Fed views the U.S. labor market?
Yeah, I think basically we've restored the pre-pandemic balance, but things are a little bit more complicated. So if you look at a lot of different measures of how tight the labor market is, the unemployment rate, our jobs workers gap, survey-based measures, many other data points, and you just average all of them, the average is basically where it was in 2019, down a long way from 2022. I think the Fed would say that's ideal. In 2019, we kind of had the, in retrospect, the best of all possible worlds, abundant job opportunities, low unemployment, but we didn't have an inflation problem. By 2022, we'd probably overshot. 2019 was one of the tightest labor markets in history. 2022 was kind of drastically tighter. And I think most Fed officials concluded that's not the right place to be, especially when you have a big inflation problem. At this point, though, I think we can kind of say now, and in fact, we could say by last fall, that we have restored that pre-pandemic balance. The reason I say it's more complicated is that there's more dispersion among these indicators. They tell a less consistent story. And that means you can be a little bit less confident about where we are than if they all told exactly the same story.
Hey, David, I'm looking at your team's note from early April. You talk about GDP forecasts a little bit higher than consensus, PCE inflation falling pretty significantly, leading maybe the Fed to cut maybe as many as 3 times this year. Is that still the Goldman Sachs call?
We think twice at this point, once in July, once in November. And, I'd be the first to acknowledge that that decision is going to be very, very sensitive to very small surprises on the inflation data, which, I don't think anyone can be certain about.
When you look at the, with you and Jan Hatzius having to put together a call, Peter Oppenheimer over in London, you put together a call. Do you have not certitude, but do you have a confidence into the summer and into the end of the year? Or are you basically flying blind till you do your next conference call to figure out what the view is?
Well, there's always some interplay between the economic side and the market side. We try to incorporate that through our financial conditions index framework. And so it's very helpful to be able to work with our strategists to get some sense of how that impulse from changes in financial conditions broadly might matter for our economic forecast.
So where's your nominal GDP call now? That's been one of our themes this morning is a lot of people looking at resilient rates, figuring a resilient inflation, and that, we may not get nominal GDP under 4%, or can you be more cautious?
Yeah, so we would have it this year at a little bit over 5%, but by the end of 2025, approaching that 4% number you mentioned.
Wow.
Well, interesting. Hey, so David, talk to us about the consumer here, the U.S. consumer. What's your call here? I know we're going to hear from Walmart and a bunch of the other retailers in the coming week or so, and we'll get a better handle on it. But how do you guys think about the U.S. consumer?
Sure. Look, I think there's been a bit of a disconnect between how we and other people looking at macro data would think about this and how people who have been kind of focused on some of these company reports might think about it. Our take is a little bit more optimistic. I think of this as a pretty simple, straightforward story, basically the 2023 story, just in watered down form. What I mean by that is, there was a lot of gloominess in 2023 too, but we looked at the data and we thought, real income is going to grow at a pretty robust pace. People's spending power is growing robustly because wages are growing faster than inflation. We're putting a lot of people to work. And there are a couple other sources of income, like interest income and some government transfers that we kind of knew were coming. And if your income's rising quickly and household balance sheets are basically the strongest in history, then the natural assumption, I think, is that consumption keeps growing at a healthy pace. Now, this year, we're not going to put 250,000 people to work per month. We just don't have that many workers. So the economy's income growth is going to slow. Everything's going to slow, including consumption. But we're at about 2.5%. a little bit stronger than I think is sustainable in the long run, but not a blowout number.
David, got to run. David Mericle, thank you so much for that brief on Goldman Sachs. And to me, the headline there is a sprightly nominal GDP, even out into next year. Futures not where they were, but still up 14. Dow futures up 76, the VIX 12.80. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. Testimony resumes this morning in former President Donald Trump's criminal hush money trial in Manhattan. Yesterday, Judge Juan Merchan denied a second request from Trump's lawyers to declare a mistrial over Stormy Daniels' testimony. Judge Merchan ruled that Trump had denied there was ever such a sexual encounter with Daniels, which he says puts the jury in the position to decide who they believe. Former President Trump, who has entered a not guilty plea, reacted as he left the courthouse yesterday.
He's a corrupt judge and he's totally conflicted. And I got to get back on the campaign trail. I'm not supposed to be here.
Testimony from a former Trump White House aide continues this morning. Prime Minister Netanyahu indicated Israeli defense forces are moving ahead with plans to go into Rafah. President Biden says the U.S. will not provide weapons to attack the southern Gaza City, where more than 1 million Palestinians have sought refuge. Netanyahu says if we have to stand alone, we will stand alone. More people have pleaded guilty and are cooperating in the investigation into Texas Democratic Representative Henry Cuellar. Bloomberg's Amy Morris with the details in Washington.
Representative Cuellar's former chief of staff Colin Strother and business consultant Florencia Rendon struck plea deals to assist prosecutors and agreed to plead guilty to conspiring to help Cuellar launder more than $200,000 in bribes. The Cuellars have been charged with accepting nearly $600,000 in bribes from an Azerbaijan-controlled energy company and a bank in Mexico in exchange for advancing their interests in the U.S. They now face bribery, conspiracy, wire fraud, and money laundering charges. The couple maintains they're innocent. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, did you notice that Paul Sweeney wasn't here yesterday?
Yeah.
He wasn't here. So our Warner Brothers Discovery discussion was not as good as it could have been. What a set of moldy headlines. I mean, traded down, it didn't do a 6, I don't believe, but it came back during the day, 8-ish. But Paul, help me here. I mean, they're completely beholden to the NBA. There's no other way to put it.
Well, it's a big part for their business, the NBA contract. It looks like NBC is going to be aggressively bidding for it, and that is one of the big properties for Warner Brothers Discovery on their TNT. They've had it for many, many, many years. And then if they lose the NBA, does that accelerate the cord cutting for a lot of their services here and their ability to negotiate with cable providers? So it's just another layer.
It's just another story. They mentioned cost cutting in that.
But guess what's happening, Tom?
What happened?
They announced that Disney Plus, the streamers, Disney Plus, Hulu, and Max are going to be bundled. The term
so
bundled.
what does that mean for the Barr family?
We're putting the cable television bundle. We're putting the cable
Mrs. Barr controls a remote control, but what does it mean for the Barr family?
Well, first, let's start when we talk about artificial intelligence. Linda says, yes, your intelligence is artificial. So, so when they get to that point about streaming, she's like, we need to keep this down. So when you have a bundle, that might work, which we go back to the old school is like, this is what cable used to be.
Exactly
so
right.
what did we just go back to the cable bundle and we're all be happy?
Here's the one economic advantage to the media companies. They don't have to pay a big cut of their revenue, subscription revenue, to Comcast. They get to keep it all. So in theory, if everybody subscribes to a bundle, it'll be better off for these media companies. But we're far from that.
We'll talk more about it. To me, it's just absolute chaos. I'm looking for a profit model, and I can't find it out there. Paul Sweeney on Warner Brothers Discovery. This is Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk on, although futures right now paired some of the earlier gains. Dow futures up 83, that's up 0.2%. S&P E-mini futures up 14, up 0.25% right now. The NASDAQ futures up 51 points, that's a rise of 0.3%. Most active in the pre-market shares of Novavax right now up 103%. Novavax soaring on that $1.2 billion Sanofi vaccine licensing deal. Also, Taiwan semiconductor manufacturer seeing April sales jump 60%. The world's largest contract chip maker running well ahead of estimates of revenue growth in the current quarter. And also one of the standouts in the pre-market, Sweetgreen. Those shares, they were up about 20%. The salad restaurant chain revenue topping estimates, boosting its same-store sales forecast for the full year. As far as treasuries right now, the benchmark 10-year is up 3 basis points. Right now, 4.48. The 2-year, that's 1 basis point higher. That is at 4.83. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Tom and Paul.
John Tucker, thank you so much. Brent crude, 84.30 is, I have a little notice there, a little lift in oil today, $84.30 on global oil. Last time he was on, we had a firestorm of comments. Paul and I, not each day, but during the week, are trying to do more on the certitude of a real estate debacle, and a lot of adults saying, you know what, it's terrible, but it's not that bad, and there's a future opportunity there. Randy Schwimmer's got a lot of experience with this in private credit, in the workout of real estate, vice chairman, co-head of senior lending, Churchill Asset Management. Thank you so much for coming back.
Great to be here, Tom.
I look at the notes you have, and Paul understands that. Frankly, I don't. I just want to know what the office tower empty across the street's doing. But I love what you say. The first responsibility is to know where the market is. I think that's a huge national story. Where is the market as we go into May?
Yeah, so what is it, Friday morning? If you had asked me yesterday or last week, and because you guys, nobody reports it better, it changes, the market perception changes with every CPI report, right? And so, and you were talking just now to David at Goldman, thinking about rate cuts, asking, are we going to have 3 rate cuts, whatever. But, a few weeks ago, before CPI came out, we thought, oh, okay, maybe no rate cuts. In fact, maybe rate increases. And then you have a poor inflation report or a good labor report, which we had on Friday. And now all of a sudden, hey, rate hikes are probably off the table. In fact, we're back to a potential cut in June. Here's where the market in private credit is right now. So let me give you a number, because I like to come, you guys are number guys. So let me give you a number. So $3 trillion, all right? $3 trillion, that is the number globally of companies that want to exit out of private equity hands but can't. They're waiting for rates to start to come down and the financing model to start to work, because the costs to finance these deals are still high. Even though expectations of rates coming down have increased, overall rates have not come down.
Paul, jump in here, because I got 8 questions and I'll monopolize this. Paul, please.
So, Randy, what's the option? If I'm a private equity holder and I like to hold a company 5 to 7 years, I'm now 8, 9, 10 years, and I know some deals specifically. What do they do if the natural buyer's not out there, if the IPO market's not as open as people would like?
So you must have been on our investment committee yesterday. So because we had,
that's where you were.
Yeah, exactly.
So we have a company that we're not the sole, but we're the lead financing on it, and the company, good business. It went through some tough COVID times and it rebounded really nicely. But people are like, what's the valuation for a business that is cyclical, right? And so they've owned this business for about 10 years. It's one of their best performers now. They're looking at the multiple they think they can get, and they're saying, this is a great performer. You know what? Let's hold on to it, and let's move it from fund, I'm making this up, 6 to fund 7. So this continuation fund vehicle phenomena, which has picked up over the last several years, where, to your point, sponsors don't want to sell below the value where they think this is going to be. They want to hold on to it. They want to keep their lenders intact. They want to give their LPs some liquidity, so they move it into a new vehicle with potentially some of the LPs rolling over, potentially some new LPs. They give some liquidity to the existings, and they keep it in-house, in the family. And so that's one thing. The other thing that's going on is dividend recaps. Let's refinance the existing debt. Let's give the shareholders a nice little dividend, increase the leverage a little bit, keep the company, and maybe refi the debt down the road. Those are some of the two most popular things going on.
Your private equity clients, if they want to go do a deal, they see an acquisition they want to make, they come to you. You're charging them a lot more than you would have several years ago. So how is that impacting the deal flow in general that you're seeing?
So let's go back to what that means. So the broadly syndicated market, I listened to our tape back in March, and we talked about this, the banks.
Yep.
Are refinancing a lot of their own deals and also a lot of private credit deals. Because to your point, a year ago, we, private credit, were the only game in town, right? So we were getting kind of a SOFR plus 6% yield, right? Okay. Yes, that has come down, right? You know, it's just 101 capital markets. You get other people coming in, the banks coming in. So our spreads have come down, maybe 50 basis points, maybe 100 at the worst. It's still, if you think about SOFR at 5.5, spreads at kind of 5.5 year plus, you know, OID, you're still at 11% cost of capital. Now, yes, the broadly syndicated market is open today. How long do you think it'll open up if rates start to go up? So the beautiful thing about private credit is we're kind of an all-weather option for these sponsors. And the bigger that we get, in our case, like we can hold large deals, we can actually, when the tide goes out in the banks, we can actually encroach on their territory.
I got to get this in, and this is a 1-hour conversation with Randy Schumer that we unfortunately don't have this morning. Bethany McLean over at Business Insider 48 hours ago wrote a blistering article on Blackstone, and she was trying as hard as she could to be fair and balanced about it and not pillory Gray or Schwartzman and the rest of them. You've just rationalized out the rationalization of illiquid market. What's it do to internal rates of return out 5 years and 10 years? To me, all of this rationalization of we can't find a seller, blah, 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 it just brings out a lower return. Is that a given?
Well, look, think about where we were before the Fed started raising rates. We were in a zero gravity environment. Nothing made sense.
Yeah,
it
not
was
saying
artificial.
Taleb said that. It was zero gravity.
We're over the last, since 1970, what's been the average Fed funds rate?
Where we are.
Where we are.
Yeah.
Exactly where we are, which means this is kind of the average kind of working environment that we have. And so what's happening is companies are adjusting to this new reality, and they're saying, oh, okay, we can't do the dumb stuff like, you know, leverage up 7-8 times on small businesses. What we can do now, though, is we can pick the better businesses. I mean, we are the most conservative
Who ends up with the
out
worst
there.
businesses? That's the key thing. Everybody's rationalizing they're going to take the top best tranches. Who's going to end up with the lousy tranches?
So, yeah, it's all about your origination. How are you sourcing? Like, as you guys know, I've told you before that our deals are coming from our private equity sponsors where we are an investor in their fund. Okay, so we're a client of theirs. So, you know, if we're an investor in their fund, they're going to show us every deal they have. So we're the most active lender, and we're also the most conservative because we can turn down deals and not be penalized by the sponsor because we're an investor. By turning down, to your point, those tough deals, what we end up with is this triple filtered portfolio, which is got, you know, very strong performance through COVID, through high interest rates. You know, we're doing fine in our portfolio right now. So that's the magic.
Don't be a stranger. Randy Schumer, thank you so much. Vice Chairman, Co-Head Senior Lending, Churchill Asset Management. So much more to talk about this. Paul Sweeney's been way out front on this, folks. Private equity and private credit and the path here, given a new illiquidity, to say the least. Good morning, Francine Lacroix in Paris. Why is she in Paris?
That's where she should be.
Well, she's there. I mean, it's a natural.
Milan,
she used to take the train,
Milan,
and you know,
Paris. That's where
she's
Francine
there.
should be. London on occasion.
She's there with Taylor. 4 shows, kicking off their European leg of her high-grossing tour. Got a set list here. The smallest man who ever lived. I can do it with a broken heart. So high school. And Francine's favorite, Down Bad.
Yep.
Taylor Swift in Paris. Caroline Conan's going.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on Markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, an optimistic day. Sweeney commanding Dow 40,000. Futures up 81, 39,617. We'll see a lot of chat here on the equity markets. Thank you, Dan Ives, on Apple as well. But Paul, I just incredibly nuanced Friday trying to figure out the linkage between economics and markets going forward.
Yeah, exactly right. I mean, we've got some solid earnings. We're finishing up. We'll get the retailers next week, but pretty solid earnings so far. And we've got a Fed that I guess is not hiking, and maybe it's just a question if and when they lower rates in 2024.
It's going to be interesting to see. And, again, as Jim Bianco said, I thought that was great. He reaffirmed inflation that doesn't disinflate. And real caution there. And he made clear, even at these rates, is it a restrictive Fed? And he says, maybe not. The 10-year real yield, 2.13%. We're on Apple CarPlay. We say good morning to all of you as well. On YouTube, subscribe to Bloomberg Podcasts. That's the way to get there. Subscribe to Bloomberg Podcasts, and you'll find us there. Also, our replay out. We're humbled by this new digital distribution with a Bloomberg Business Flash. John Tucker.
All right, Tom and Paul, risk on feel for this Friday morning. Dow futures up 90 points right now. That's up 0.25%. NASDAQ futures up 0.25%, 41 points higher. S&P E-mini futures up 12 points. That is up 0.25% right now, 40 points away from a record close for the S&P 500. It's worth noting about 90% of the S&P 500 market cap already has reported results. Still missing, though, NVIDIA. That accounts for 5% of the benchmark's market cap. NVIDIA is going to report on May 22nd. Yes, that is correct. Right now, as we look at Treasury's 2-year yield, 1 basis point higher, that is at 4.83. The 10-year, the benchmark, 3 basis points higher, that is at 4.48. We've got to do the Novavax update as we've been doing all morning long. Right now, 120% higher in the pre-market. Novavax soaring on that $1.2 billion Sanofi vaccine licensing deal. And, of course, at 10 o'clock, we'll bring this to you live right here on Bloomberg Radio, University of Michigan Sentiment Index, along with the inflation expectations components of that. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Tom.
Thanks so much. Face the Nation, hugely popular on Bloomberg Radio Sunday afternoon, of course. See it across the CBS television network Sunday morning. And always we look forward. There are 4, 5, 8 topics of the moment that turn it into a 5-hour extravaganza. Joining us now, Margaret Brennan. And Margaret, I'm going to stop and look back at your piercing conversation, guessing 5 days ago, with Rania of Jordan. This is your wheelhouse. You've been doing this forever. Jordan has an absolutely unique position in the Gaza debate. What is Jordan's best outcome of this tragedy?
Well, the conversation with Rania, I think, was really a warning from a good friend of the United States that there are national security implications from what's happening in Gaza that could really hurt the U.S. That was the persuasive part of the Queen's argument, I think, in terms of their own self-interest. I mean, Jordan and Egypt have both publicly warned that if there is a full-on assault on Rafah in southern Gaza, that it could really endanger the 46-year peace treaty with Egypt and the peace treaty since 1994 Jordan and Israel have had. There are really very high consequences to the next few choices that Benjamin Netanyahu makes. And now you're also hearing the White House say that they think that a full-on assault would actually embolden Hamas and strengthen it.
So to get to Sunday morning and face the nation, what is the CBS reporting on what the White House will do?
Well, this just is one of the most politically and emotionally explosive topics domestically and geopolitically. This is a really tough call for President Biden. You saw the incoming he took, particularly from Republicans, even with this pause of just 3,500 bombs. Israel's the largest recipient of military aid and U.S. aid in the world, period. And he has to face this choice from a guest of mine on Sunday, Senator Chris Van Hollen of Maryland, who says Israel shouldn't be held to a different standard. It should be held to the same standard as everyone else and only use weapons in accordance with international law, period. And that there should be a consequence if they don't. And there should be a consequence if they block aid. And then you have Tom Cotton, one of my other guests, on the right, arguing this is binary. You're either with the terrorists or you're with Benjamin Netanyahu. And Benjamin Netanyahu's back home saying, my government may collapse if I don't go hard because of these right-wing ministers who are threatening to resign, but I'm also alienating my greatest ally in the world, and perhaps long-term, is that a larger security risk to Israel? It is a really tough choice, and today we will see one of those decision points possibly, because this report's supposed to be delivered to Congress, where all recipients of U.S. aid who are at war are supposed to be ruled as to whether they're compliant or not, and Israel's one of them.
Margaret, so it's obviously a very busy time for President Biden and his administration, also a very busy and time for former President Trump here in Lower Manhattan.
Yes.
How will you be covering that over the weekend and into next week?
Well, I haven't really, frankly, covered a lot of the criminal trial on the day-to-day. I check in on it, but on Sundays, I think until we get to the point of a conclusion, this criminal case, though historic because it is the first former president to face a criminal case, isn't yet at the point of consequence. Obviously, the falsifying 34 business records in order to benefit his campaign it is potentially consequential, but it's the federal trials that I keep more of a eye on, and we heard the timeline for those might be pushed. That's the one that I'm really keeping my eye on in terms of presidential immunity and January 6th.
Margaret, what kind of summer do you think this will be from the campaign perspective? What's the feeling in Washington? Because, boy, we've got a long way to November, and I just wonder how the folks in the Beltway are positioning themselves.
Exhausted. Yeah. We're all exhausted. It has just been an unending stream of political crises at home and abroad. And that is the part that I think people may not fully appreciate, is just how consequential this election will be, because the inbox of the commander-in-chief is so overwhelming when it comes to threats from China and Russia and the Middle East. And domestically, it's we essentially have, as one senator said to me this week, we have 6 weeks left to get work done before Congress basically goes home.
That's so smart. And to me, Margaret, this is absolutely critical. Did Margaret Brennan survive the White House Correspondents' Dinner? So she did that. The president didn't talk until 10:17 p.m.
I snuck out, I'll be honest.
I saw you. Margaret, I think this is so critical. It's early May, and we're not treating it like a normal campaign season at all.
It's not. It's not normal. I mean, we're looking at the scenario of the political conventions this summer essentially being like non-events because the nominations are so locked up. But then we also have that caveat of the two oldest candidates for president ever, and that, well, maybe there should be an alternative, or maybe there should be a pipeline of talent for both parties behind them, and maybe that's what we should all be focused on in the next few weeks and months. But it is so partisan and politically explosive right now.
Right.
I worry about the months ahead for all of us.
And to get to Chicago and Milwaukee is, well, Margaret Brennan, thank you so much. Of course, across the CBS television networks, Face the Nation, a Sunday morning, and Sunday, 2 p.m. in New York. It's on Bloomberg Radio. Face the Nation Sunday in New York, Washington, D.C., Bloomberg 106.1, Boston, Newburyport. Face the Nation, 2 p.m. on Sunday. Equities, they lift, not like they lifted before, but still up 14. As Paul noted, the VIX under 13. It's a bull market, 12.80. with our news in New York City. Michael Barr.
Thank you very much, Tom. Paul, John, testimony will resume shortly in former President Donald Trump's criminal hush money trial. A Trump aide will resume testimony. Yesterday, Judge Juan Merchan denied a second request from Trump's lawyers to declare a mistrial over Stormy Daniels' testimony. Former President Trump, who has entered a not guilty plea to the charges against him, reacted yesterday.
I'm innocent, and I'm being held in this court with a corrupt judge who's totally conflicted. Take a look at his conflict. It's a disgrace to the city of New York, to the state of New York, and to the country. Also yesterday, prosecutors revealed they no longer plan to call Karen McDougal as a witness. McDougal received $150,000 in hush money payments for her silence about an alleged affair with Trump. The fallout continues after President Biden's warning the U.S. will halt some weapons shipments if the country invades a city Israel calls the last Hamas stronghold in Gaza. President Biden threatens to further withhold U.S. weapons from Israel and would not provide weapons to attack Rafah. Prime Minister Netanyahu firing back, saying, if we have to stand alone, we will stand alone. Ukraine is set to receive U.S.-made mobile rocket systems paid for by Germany. Bloomberg's Ed Baxter has the story.
These are HIMARS mobile rocket systems from U.S. stocks. They've proven to be very effective, disrupting Russian supply routes and ammunition dumps far behind enemy lines. Now, the plan was first discussed during the extended wait for aid as U.S. Congress didn't or couldn't act. Germany is set to spend the most on defense since the post-Nazi armed forces were established after World War II. The statements from Germany say that they cannot simply stand by and watch and wait as international law, global order, and values are being destroyed. Ed Baxter, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Program note, leave it to Scarlet Fu.
Yep.
Alex Steele. You can talk to Alex Steele about this in the 10 a.m. This afternoon on the close, because Jess Metten is a surveillance salad correspondent. They're going to have John Neiman on. The Sweet Green CEO will be on.
Oh.
And they're out of their 26% revenue growth or whatever the number was, they're launching their new caramelized garlic steak.
Wow.
It's like something you get at Sylvia's up in Harlem. You know, it's like a platter of it. He's going to be on. CEO.
Oh, very good. Well, he's going to do a victory lap. The stock is up 25% pre-market, Tom. It's up 108% year to date. How about that? People are eating salads out there.
Scarlett eats there. I never darken the door. The foo is there.
Yep.
Like 3 days a week.
Sure. She's got her.
You know, it's just like
she's got her card. Gets punched.
I mean, this is not the tofu thing that Jess Metten was eating. This is the caramelized garlic steak.
Very good.
If I say that once more, we're going to have to go.
Yeah.
Me and Michael Barr are going to be over there at 10 a.m. Please, are you open yet? Are you cooking the caramelized garlic steak? Oh, I said it. Excuse me.
There we go. I'm drooling.
Paul, we're going to talk this bull market. I'm sorry. Under 13, 39,600.
Yep.
And as Dan I said, cab drivers aren't talking about it.
No.
That's how I'd put it.
Yeah, it's interesting. We got futures up about 0.3% here today. Again, I think that rate hike discussion that we had over the last couple of weeks, that seems to be a little bit off the table here. You put that against a backdrop of some decent earnings. And that seems to be all this market needs here over the last couple of weeks.
Program note, Derek Halpenny, thank you, MUFG of Japan. He's in London. Euro yen getting you to 7 p.m. Sunday to greet the week in Japan. 67.78 on euro yen. That is a weaker yen against stronger euro. Euro's up because Taylor's playing Paris.
Oh, big.
You know, it's like move the needle on European GDP. But worth watching, euro yen into the Japanese Monday morning. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Ahead of the cash open on Wall Street, futures indicate a higher open. All three right now up about 0.25%. The Dow futures up 101. S&P E-mini futures 14 points higher. That follows yesterday's 0.5% rise for the index. And the NASDAQ futures right now 52 points higher. As far as treasuries are concerned, 2-year yield right now 2 basis points higher. That's at 4.83. The 10-year 3 basis points higher. That's at 4.48. Did hear this morning Federal Reserve Governor Michelle Baumann saying the central bank should proceed carefully and deliberately, her words, as policymakers move toward the Fed's 2% inflation goal. As we approach the open, shares of Novavax in the pre-market are up 120% right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
Thank you so much, John Tucker. I have never been more confused about Saudi Arabia and the royal family. As we just mentioned, Ron, you have Jordan with Margaret Brennan. Long ago and far away, you had to read Robert Lacey, I believe it was, 3 or 4 books on Saudi Arabia. You had to read, various others out of England. And then there was a more modern book by Ellen Wald, Saudi Inc. And all I know is right now my head is spinning simply because time has moved on, and I'm not sure the royal family of Saudi Arabia is the same as the royal family that I think I knew of Saudi Arabia, or at least what David Lean gave us in Lawrence of Arabia. Ellen Wald joins us. The book is the 1-volume Saudi Inc. She's with the Atlantic Council on Energy. Ellen, just as simple as I can put it, who is the new royal family of Saudi Arabia, and are they our ally?
That's a really good question. I would say in some ways they're very different, but in other ways they're very much the same. Are they our ally? I think the answer to that is no. I would say they're probably more of a strategic partner, but I think that Saudi Arabia sees America as their ally, and that can complicate things a lot.
So I know there's a deal in the works between the U.S. and Saudi, encompassing a lot of technological issues, a lot of economic issues. Can you summarize kind of what the discussions are between the U.S. and the Saudis right now?
Yeah, this was the really kind of big story earlier in the week that this U.S.-Saudi kind of weapons, diplomatic, economic deal is nearing the finish line. And essentially, it seems like the U.S.'s goal is really to limit Chinese influence in terms of Saudi technologies. So they don't want Saudi Arabia using Chinese technology in their sensitive networks and things like that. So the U.S. is going to provide, as they call, investments in AI, quantum computing, and they're also...
Ellen, I don't mean to interrupt, but this is the first thing I dealt with this morning. So basically, we want to tell Saudi Arabia what to do with Chinese technology. Do we want to tell them they can't drive Chinese electric vehicles?
That's a really good question. I think that they'd probably rather that Saudis drive Rivian, Lucid vehicles, which the PIF has a big stake in that company. It's really unlikely that people in Saudi Arabia are going to be driving EVs, considering that they got to drive really long distances.
I even got that right on the Ellen Wald test.
Exactly. All right, so Ellen, let's talk about broaden out to kind of the global energy markets here. We've had both WTI and Brent crude pull back a little bit from recent highs here. What's your kind of sense of where oil may be heading here in the near future?
Yeah, this is a really good question, and does in some respects depend on Saudi Arabia. It does seem like there's some economic weaknesses, some indications of economic weaknesses. We're looking at a lot of kind of some weaknesses in diesel and middle distillates, which can be a troubling economic sign. In the past, that has definitely signaled oncoming economic weakness, but on the other hand, it may not. We're looking at strong summer demand, though I think that once summer demand, kind of rolls through, it's really quite questionable what we're going to be seeing in the fall globally. Obviously, China matters a lot, and it's kind of unclear. There are signs of weaknesses, but then again, you never know what the Chinese government is going to do, and they're still importing a lot of oil. When it comes to kind of oil prices going up and down, I think we're seeing a pullback from a lot of the risk premium that had come on back when it looked like Iran and Israel might kind of destroy each other. I think that traders really thought there was a real possibility of war, but when you look at kind of the facts on the ground, neither of those countries is equipped to fight a war against each other at all. So I think it was much more likely that we were going to see a kind of a cooling of tensions as opposed to continuing escalation.
So, Ellen, I guess the OPEC next meeting around June 1st. I'm just not sure how much we should all pay attention to OPEC these days. How are you going to approach it?
That's a good point, especially because when I think when OPEC is doing its job well, we don't really need to pay attention to it because their job is really to keep prices stable. And actually, prices have been fairly stable. They've really kept a lid on production. They've managed to, to kind of keep everyone in line. But I do think that this U.S.-Saudi deal could have some impact because there is a sense that if it goes through, the Biden administration is going to be expecting the Saudis to increase production so that oil prices come down by the time November rolls around. And I'm not sure that the Saudis are really prepared or interested in doing that unless they get this full deal. So it's going to be quite interesting, I think. They might increase production in H2 or at least for one quarter if things look really tight for the summer.
I mean, Ellen, you don't do a market call. I get it. We're not doing market economics. We're not trying to game out a barrel of oil. But we've gone 90 to 80, as you say. Do you have in your head a geopolitics, a dynamic of supply and demand that gets you to $70 Brent, or dare I say $60 Brent?
I think that's really tough in the current inflationary area where we are, because we always think of oil prices as causing inflation, but inflation also acts on oil prices. So we're talking about rising costs in all aspects of oil production. Plus, we've now got a very much consolidated U.S. shale industry, which is not going to re-enter this kind of produce at all costs time. So I really don't think that unless we see some kind of economic collapse or recession, I don't think that there are the conditions in terms of supply to put us back into that 60 barrel range.
Just for a moment there, Ellen Wald sounded like Emery Send. I mean, it's just great. Market oilnomics with Ellen Wald. Ellen, thank you so much. We look forward to the next volume of Saudi Inc. It's due, to say the least, with all the changes. Ellen Wald with the Atlantic Council, a wonderful book, really can't say enough, and also Transversal Consulting founder. Paul, we got to get the market open here. We're doing it in 6 minutes. And I just, let me give you the futures levels. They usually trade a little richer than the close. 52.54, 5,000 rounded up, 5,300. 39,636, round up the Dow to a Sweeney 40,000. 18,300 on the NASDAQ. I don't know what you round that up to. Small caps, Lori Calvasino will tell me what to do with those. Paul, it's a bull market, and I get out there zero enthusiasm, except for people like John Tucker that bought NVIDIA early.
Yep.
And he's buying, 3,000 square feet on a beach in New Jersey.
Exactly right.
Why am I still here?
The love of the game. That's why you're still here, John
that's
Tucker.
it.
Yeah, no, so for the folks, we've heard this time and time again in this higher interest rate environment, the people that own assets, whether it be stocks, bonds, whether it be real estate, whether it just be money markets, you're doing okay. You're doing okay. It's the folks that are not owners that are net borrowers as opposed to net lenders, as Randy Schwimmer was just saying. Those are the folks that are feeling it the most, that feel the inflation really biting.
Yeah. And I will admit, I think everyone knows I'm in the disaggregating. I just have so much trouble aggregating policy. I think it's a huge challenge for Jerome Powell. I think he should get some major slack for that. The political entities he's got to deal with towards the election.
And for Matt Miller, let's call out Bitcoin, Tom. We'll give you Bitcoin, 62,800. So we're right around 63,000. Remember, it had been 73,000.
I got a new deal. I got my contracts now to 87 pages. Anytime Matt Miller's mentioned, I have to promote Hot Pursuits.
Yes.
The new Miller vehicle. It's an app. It's an auto podcast. Hot Pursuits. Matt Miller.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, your opening bell report from the New York Stock Exchange. Waiting for the opening bell. There it is from the New York Stock Exchange. Heading into this, looks like the stock rally is going to extend to a third week. As we looked at the Dow Jones Industrial Average, out of the gate, up 92 points. The S&P 500 right now, after yesterday's 0.5% rise for the index, right now 14 points higher, up about 0.3%, 52.27 for the index. Remember, the S&P record is 52.54. Right now, the NASDAQ 100, 56 points higher. That is up 0.3%. At the top of the hour, the latest economic report, University of Michigan Sentiment Index, along with the inflation expectations, a part of that. And also out of the gate, you've been doing Sweet Green, the earnings there, 30% higher for Sweet Greens.
Whoa.
How's that for salad? And Novavax shares right now 118 points higher, soaring on that deal with Sanofi. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thanks so much, John Tucker. This is a joy. Jim Glassman has given us so much help on Bloomberg Surveillance over the years, working with J.P. Morgan and working with their commercial division as well on original economics. And the gentleman from Northwestern, ensconced now out in Los Angeles, so much on the social trends that we see. I just got in a great note on a potential slowdown. Thank you, Robert, for that, where he's seeing cruise ships are finally not as empty. I just looked, Paris CDG is $3,040 in the flight I look at.
Okay.
That's 1/3 of what it was at the pandemic peak.
I think you can hop over there for the weekend.
You know, Glassman, I mean, he's looking June 7th, Dodgers, Yankees. I mean, you know, we'll see. And he joins us right now. Dr. Glassman, of course, forever an iconic, in some form of pretend retirement from J.P. Morgan. Jim Glassman, it's been way too long. You cut your teeth at Northwestern on the labor dynamics of minorities, the labor dynamics of children in the workforce. What's the key labor dynamic you're studying right now?
You know, Tom, it's something you began to hint about a long time ago. It took me a while to get my hands around it. You kept asking all of us, what about the two Americas? And, you know, the thing that's really been consuming me is trying to understand why it is that although the living standard of America is higher than it's ever been before, the economy is doing fine, people aren't happy about it. And I think at the core, the issue is there's been tremendous technological change going on that's been transforming the economy. I date it back to 1997. That was the beginning when you began to sense that something big was underway. And the way to me, the thing that really tells you what the dynamic is and why it is that the labor market's not really the issue for the inflation story. If you look at the share of income going to all the different factors of production, the share of income began to decline in the late 1990s, and it came down quite dramatically, even though, even through the pandemic, the share of income going to workers has come down, even though it's hard to find people, even though you think the wind is at our back. And that to me is all about the digital revolution.
What does a technological impulse do to our framework on the run rate of real GDP, or dare I say complex nominal GDP? Does that goose the statistic out 3 years or 5 years? Or does the technology overlay decrease our guess of growth?
No, it should, because you should be able to get you to produce more with the same work effort. It isn't real visible. It was visible shortly. You know, during the pandemic, when everybody had to scramble to figure out how to do what Amazon was doing, you did see a burst of productivity. But I think it's worth thinking about this, because this fascination we all have with artificial intelligence is another variant of the dot-com phenomenon that really set this thing off 2 decades ago. And it's changed the dynamic in the labor market. It's changed the dynamic in the way inflation behaves. We economists are struggling to understand why, for the past 25 years, has inflation not behaved the way I learned in Northwestern. We're completely mystified by it. And the pandemic comes along, and this inflation issue we're dealing with has nothing to do with anything we've ever seen before. It's all about supply side dislocation. Jay Powell kind of hinted more at that in his recent press conference. And that tells you that the inflation issue is not really about the Fed. Inflation went up and it came down, even though the unemployment rate was pretty stable. The way the Fed usually manages inflation is by raising rates, slowing the economy, increasing unemployment. That didn't happen. That tells you this is a supply side shock that's hitting us unlike anything we've ever seen before.
Hey, Jim, so has the supply side changed to the point where a 2% inflation level, which is still the Fed target, Is that something that we should be focusing on, or has maybe the goalpost changed?
No, I think the goalpost is always going to be the 2%. The Fed is glued to that because they think that's all about credibility. And honestly, I think the payoff, if you look at inflation expectations, what people think down the road where inflation is going to go, the amazing thing to me is that despite all this turmoil about inflation, professional forecasters continue to think that inflation is going to stay around 2%. That, to me, validates the credibility that the Fed has in the long run. We know what the game plan is. We had all this disruption, and it hasn't changed. So we're sort of stuck to that, and I think we're going to get there. I mean, all the dislocations in the commodity sector have passed. We're now just dealing with the reverberations in the service sector. And the reason for that is because the service inflation has tended to lag all the other. I've never seen that before. When you look at all our past cycles, inflation in the goods and services sector moves together. This is a sign of a supply side shock that's just kind of still rippling through.
So given that background, Jim, do you think this U.S. Federal Reserve should be cutting rates now, or do you think they should wait?
Well, I think so, but I think it's hard to explain to the market why they would be doing that when everybody thinks there's still an issue. Yep. But the reason I think what we're learning is that it was important for the Fed to get its foot off the gas. Once they realized the economy was recovering from the pandemic, we didn't need to go to restrictive policy. And if you look at the Fed funds rate, 5.25%, 5.5%, that's twice as high as the Fed says they think is appropriate for the long run. So if you're trying to set up for the future, you really should be backing off, returning policy to a neutral stance. But I think that the trick is everybody's so focused on yesterday's inflation numbers that it's hard to get there until you get a break.
Jim, I want to throw an audible at you, and I can do this with the incredible research you did years ago on teenage employment and unemployment. The stereotype that all of our listeners face today is when we were kids, our parents kicked us out the door one day after your 16th birthday and said, go get a job. And now it's much, much harder to do that because of a wonderful and valuable immigrant community that's different than it was in our childhood. There's no question about that. What do we do about teenage unemployment, or just simply they've been removed from the system at age 16, 17, and 18?
Yeah, it's such a fascinating story. Just another version, what you just said, Tom, was if you ever read the book, The Boys in the Boat, it's a reminder, it's a look at life in the 1920s and 30s, the University of Washington's crew team that won the gold medal in crew. And it's about life in that time and how it's changed. And I think it's a reminder that when people are doing better, we today live a lot better than our parents did and our grandparents. And I think kids don't have the same incentive to get out there. I think the best thing, the best thing to do is to get prepared, get a good education, get the right skills. But our kids today can take more risks. They don't have to get out and work like our parents did or their parents. And it's a challenge. And I think at the end of the day, the kids who are better educated, better prepared are going to do, you still have to work. You still have to make a living down the road, but it's not as important that you get out today.
Jim, thank you. Jim Glassman, Dr. Glassman, of course, forever with J.P. Morgan, now ensconced. He's in Chavez Ravine. He's over the third base dugout. Yeah. He's getting in like 20 games a year.
Good.
Great
place to see a ball game.
He's on first name basis with Mookie Betts. Jim Glassman, thank you so much. There's a lift to the Sweeney Market Dow, 39,573. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. There's word the star witness for the prosecution in former President Trump's criminal hush money trial is set to testify Monday in Manhattan. Former Trump lawyer Michael Cohen will testify about his role in arranging a $130,000 payment in 2016 to adult film star Stormy Daniels. Yesterday, the defense portrayed Daniels as an opportunist. Defense attorney Susan Necklace said to Daniels, "You're making money off the story that you had sex with President Trump selling things from your store, right?" And Daniel shot back, not unlike Mr. Trump, who has been fundraising using his mugshot from his Georgia indictment. Today, a former aide to Trump will continue her testimony. Israeli Prime Minister Benjamin Netanyahu struck a defiant tone against President Joe Biden after the U.S. withheld a shipment of bombs as a warning to its top Middle East ally not to invade the southern Gaza city of Rafah. Netanyahu, in an interview Thursday on Dr. Phil primetime broadcast on Merit Street Media.
If Israel has to stand alone, we'll stand alone. But we also know we're not alone because we have so many decent people everywhere who do support us, who do understand the truth. And we will defeat our enemies and we will secure our future.
Netanyahu, talking about Biden, says we often had agreements, but we have had our disagreements and we've been able to overcome them. I hope we can overcome them now. Severe weather hit for a fourth straight overnight in much of the South. Storms ravaged parts of Middle Tennessee. A woman was killed and over 100 homes damaged in Maury County. South of Nashville, Governor Bill Lee toured the aftermath of an EF3 tornado that tore through Columbia. He says homes were devastated.
It's heartbreaking. You realize that you don't know what it feels like to be that family, but you know that it must be awful.
Since Monday, there have been nearly 100 reported or confirmed tornadoes across 18 states. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Paul Sweeney, Dow 5000, 1928. Dow 5000 again, painful, 1955. We had to wait that long to get back to 1928.
I didn't know that.
Dow 10,000, which I'm sure you and I remember, 1995. That's, you know how many years ago that is?
I was in the newsroom, 499 Park Avenue in Bloomberg, and the boss said, don't make a big deal out of it, it's just another number. That boss isn't here anymore.
Dow 20,000, 1999. Dow 30,000, like 2 cups of coffee ago, 2017-ish, 18-ish. And here we are, buttressed up. You know, what do you think, Paul? I mean, it's just like, it's amazing.
It's that courage to be in the market. It's the compounding thing. It's what financial advisors, have been telling us for decades. It's kind of what I've tried to tell my offspring. Max your 401k, throw it in the equity markets. Worry about, diversifying later on in life.
Nice lift to the market, up 166 points, 39,553. It was back in March when Michael Barr was living large. Let's see, we're like 39,807 is sort of our daily high here. I sound like, Jeff Hirsch over at Stock Traders Almanac. I'm doing my, I'm trying to give some perspective here to where we are. We'll do a lot of this, particularly in the next week. I mean, it's extraordinary to see the VIX back to 12.81. And as I said on this Friday, the lack of enthusiasm is just, I find just fascinating. It's been a great show. We're going to finish strong here. Please stay with us. Again, up 170 Dow points, 22 points on SPX. The VIX, 12.81. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The stock rally extending into a third week. The S&P 500, 22 points higher right now. That is up 0.4%. Number to watch, probably won't get there today, 52.54. That would be the record close for the S&P 500. Dow Jones Industrial average up 162 points. That's a rise of 0.4%. We're at 39,549. The Dow record to watch, 39,807. NASDAQ 100 right now up 115 points. That is a rise of 0.6%. Yields right now, they are higher. The 2-year yield, 2 basis points higher. That's at 483. The 10 up 3 basis points at 448. Did get some Fed speak. Federal Reserve Governor Michelle Baumann saying the central bank should proceed carefully and deliberately as policymakers move toward the Fed's 2% inflation goal. Among the stocks on the move after the earnings from Sweet Green, the salad place, 37% higher. And Novavax shares, they're up right now 131 points after their vaccine deal that was announced. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. I greatly appreciate it. Right now, we're equity, bond, currencies, commodities. Paul and I are going to do a little summary here of what we got. To me, and I said this, Paul, yesterday when you were out on your sabbatical, it's an absolutely nuanced red and green on the screen. There's not something dramatic. Oh, OMG, this, like this. Right. But the nuances in the non-correlations going on, I just really, academically, I'm fascinated about it. I think I'm scared stiff. I'm going to stay in triple leveraged all cash. But, Paul, I mean, the nuances here are extraordinary.
They are, and it's not across the board here. We see a lot of winners, a lot of losers. It's not just the Magnificent Seven or whatever they are now. It is broadening out. I think a lot of market strategists was like to see that participation broaden out even more to go to the health of it. But again, you got your VIX, Tom, sitting here still below 13, so kind of just marching kind of up and to the right.
A little anecdote here of my ute. My father took the first non-defense photograph of Sputnik, and it was a huge deal. Like, secret people visited the house to talk to him. It went worldwide in, I think, late 1957. I really can't remember. And there's a whole heritage of space. And what I can clearly remember as a kid is the absolute loneliness that there was only one, or with Echo, maybe two, or Paul, 3 things up there.
Yep.
It has changed. Bruce Einhorn leading our ascendants in our new focus on space coverage. It's a broad mandate from Bloomberg. We're building this out along with all that we see with Elon Musk and Mr. Bezos, the magic of Mars, what we're doing out with the Cassini mission, et cetera. And Bruce Einhorn goes to the reality now, which is not the loneliness of Echo or Sputnik, but there's so much stuff out there, it's going to fall in John Tucker's front yard this weekend. Bruce, how bad is it? Why don't the satellites bump into each other and fall down and take out Yankee Stadium?
Well, thank you for that introduction. I think the short answer is that space still is very big, right? So we don't have to worry at the moment of that much congestion. But it is a big concern that low Earth orbit in particular is getting crowded and will be getting much more crowded in the years to come, as you mentioned, Mr. Bezos. Amazon and many other companies are looking to expand their presence in low Earth orbit. Up until, fairly recently, most of the satellites were much higher up in space, like Sputnik and all the others. Low Earth orbit wasn't really a big target. And the advantage of being in low Earth orbit is that you can have communication satellites that can get things back and forth to Earth really fast, and that means that you can use satellites for internet connections and stuff. But the disadvantage is it means that you need to have a whole lot more of those satellites, and that potentially leads to the problem. Those satellites don't last nearly as long, so they have a shorter shelf life, and at the end of that, they have the potential of turning into just big pieces of junk.
Our perception of this is George Clooney and Sandra Bullock in Gravity. What's the real world of trying to figure out what to do with all the garbage up there?
There have been companies that have been working on this problem for a while, and we're now at the stage where we're starting to move from lots of interesting ideas to interesting ideas that are actually being turned into technology that are now starting to be tested up in space. So we're not there yet in terms of actually having technologies that we know will work, but we are now seeing companies starting to test them. Most notably right now, there is a test going on by a Japanese company called Astroscale, which has a mission underway right now with a spacecraft that is trying to get very close to a big piece of an old Japanese rocket that's been up there for quite a while. The goal is to be able to get close enough to that to then surround it, circle it, examine it. Later, missions would take the next step of trying to, say, reach out and grab it and eventually then tow it somewhere else so it would be out of the way.
So, Bruce, you have to understand, Tom and I grew up with the Apollo program where NASA was really the only game in town. But I guess what's evolved over the last decade plus has been the commercialization of space. And I guess that is one of the reasons why Bloomberg is focusing on the business of space and with you and your team. Talk to us, what is the space economy these days? I mean, how big is it? And how do you guys segment it?
So there are a couple different sectors that really are the ones that are particularly interesting right away. There's the business of launching satellites into orbit. So that's something that, of course, is dominated by SpaceX. So SpaceX had about 100 launches last year. That's far more than any other company. A lot of those launches were for their own satellites, for the Starlink satellites, and so there are now well over 5,600 of those communication satellites operating, and SpaceX keeps launching more of them. Every few weeks, there's several more dozen Starlink satellites that go up into orbit. They have a huge head start. There are other companies out there that are trying to do similar things. There's one called OneWeb, which is now part of Eutelsat from France. So they have a low Earth orbit satellite constellation as well that's competing with SpaceX's. Amazon is building one. The Chinese want to get into this. The Europeans want low Earth orbit satellites of their own. So there's going to be a lot of interest there. So one, just getting the satellites into orbit is a big business and one that's dominated by SpaceX. And then the making of the satellites, there are all different sort of uses for them. It's not just for communications, but for Earth observation. And then one of the things that we're looking at in this story that I just worked on is what to do at the end of the life of those satellites, and is there a business to be developed in servicing satellites to extend their life or helping to get them out of the way once they stop operating.
Bruce, thank you. Bruce Einhorn with us here on anything to do with space. It is a new Bloomberg Space Vertical. Yep. That's what the hipsters call it.
I got some language for you, Tom. For more inside stories of investments beyond Earth, from satellite networks to moon landings, visit Bloomberg.com/space. So there you go. That's how you create a vertical in Bloomberg News.
Late at night on the deck, you just get in the chair and look up at the sky. You can see so many of this. And it also helps if you had a couple of glasses of wine.
It does. It helps there.
See more that way.
That's exactly right.
Well. It'll be interesting.
There's so much you can do from John's backyard. Who knows what goes on back there?
I'm going to watch, I should watch Matt Damon. He's on Mars this weekend.
That was a good one. That was
actually a good movie. Yeah. I mean, they had some
really good.
Of the tensions and the gradients of a vacuum and air and all that. They were actually...
Of course, Apollo 13, that's up there.
Don't forget, as long as you're talking about space, this weekend, Mother's Day weekend, we're going to get blasted with positively charged ions from the sun.
Listen to you, Debbie Downer.
Well, I'm sorry. Just prepare, because it could be disruptive.
That's the least of my worries for it. Sunday in New Jersey.
Well, thank you. It's somebody's birthday. He owns half of Ireland, I think. You too. Happy birthday.